We're going to continue where we left off. Oh shoot, let me turn on the volume.
Like it's a lot of whipsaw in here. Even though it's going to levels that we can anticipate, the the clean, real low risk, just precise points of entry, they're not as obvious right now. And then when I say things like that, right away you're thinking, oh, here it is, that's a sign that they're changing the algorithm. It's not happening. It's just we are in a very difficult time. There's been difficult times before. I've been in markets. If you look at how prices been behaving, like it's a lot of whipsaw in here. Even though it's going to levels that we can anticipate, the the clean, real low risk, just precise points of entry, they're not as obvious right now. And then when I say things like that, right away you're thinking, oh, here it is, that's the sign that they're changing the algorithm. It's not happening. It's just we are in a very difficult time. There's been difficult times before. I've been in markets long enough to know that there's been times that are sloppy. You just can't expect to be as precise because the market's just being really crummy. We have a lot of things right now going on in the past few years and right now today. Potential WAR that's increasing. Um,
Wait, hold up. That's definitely. No, I'm on a mic. That should be better now. That was definitely going through my headphones.
Bank day, markets is being really crummy. We have a lot of things right now going on in the past few years and right now today. Potential that are sloppy. So we are just precise points of entry. They're not as obvious right now. And when I say things like that, right away.
Dog, what just happened? I need to make sure this is working. Uh, why is it not working?
Everybody's wanting to cut somebody else's throat because they took their parking spot. You know, everything is intense right now. And add to it, now you're looking at these candlesticks and you're demanding they speak to you in kind whispers. All right, so far we're seeing what I'd like to see, which is moving down away from that opening price at 930, which frames the opening range gap high. Everybody's wanting to cut somebody else's throat because they took their parking spot. And everything is intense right now. And add to it, now you're looking at these candlesticks and you're demanding they.
Okay. Now we should be good.
If we had gapped or opened lower than where we settled yesterday, that would be the opening range gap low. Okay, so that's how I'm labeling that, so you can keep track of everything I'm saying. So we have a high, low, higher high. Yes, this high and this high. I'm looking past that because we went to this high ultimately. So if I went to a higher time frame chart, it would be referring to this high, that low, and that high. But because these highs here and here are inside the range of that high to that low, I'm looking at this structure here as the breaker. That's what I'm looking at, okay? So it's these two down closed candles that I'm referring to specifically. That would be my bearish breaker. We're below that gap. I told you I want to see that happening. We're inside the 10 o'clock hour. It's 6 minutes after 10. Admittedly, I'd like to see it go below that low and leave a fair value gap here. Come back up, overlap into this full fair value gap. That would be an inversion fair value gap inside of this bearish breaker, so we'd be trading there after a potential shift in market structure lower. So we're watching this low right here, okay? Let me draw a little line on it. I always do that. I try to change the color of the line. I'm changing the color of the text. Alright, so we're watching to see if we go through 40.75 and 3/4. I don't want to see it come back up yet. I want to leave that extended, this candle like that, because then we offer what? A fair value gap to form right inside of this old fair value gap and inside the range. Let me draw that out too. And now I don't usually have all this stuff on my chart as a reminder that folks that are seeing my charts, all this lipstick on it. I'm only doing it so that way you can see conceptually what I'm internalizing in price. I'm not saying that you should have this on your chart forever, but while you're back testing and studying old moves, you kind of want to have that stuff on there. And over time, your eye won't need to see it because you'll just jump to it with this view on the chart. Now see how animated this run is from here up here? So while yes, this parent price swing starts down here, I'm going to run a fib from this low up to the high, and that's going to be my dealing range. And the reason why I'm picking this low, okay, for the folks that are just eating potato chips and watching something else and at the same time you're listening to this, I'm choosing this low because it had a very energetic price run. So while yes, the parent price swing begins down here, if we're looking at the fractal that's being shown in this chart on my screen. I'm electing to use this one because it's much more energetic. It's much more pronounced. You can clearly see that one versus this rounded bottom pipe thing. I don't like that so much. We basically are in a range, and we left it, and then we energetically moved away. So I'm going to pull a fib just to get equilibrium. Okay, so equilibrium comes in right here. So right now we're still in a premium. What discount arrays exist inside this portion of price action? Look down here.
These lows, this inefficiency, this
in your mind,
order block.
Something that would be a reason for price to go down into. Well, you see these lows here, so that would be sell side here. That's sell side. Okay, and there's a small little fair value gap here with a short-term low at sell side. Okay, and then we got the sell side down here. So I just walked you through how to map out discount arrays when we're looking for the market to probe below. I'm watching this low down here, okay? It's pretty simple, isn't it? It's not a lot of acrobatics. Very simple, straightforward idea. Imbalances and liquidity. So we've tried many times here, 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 here to go higher, and it logically turned, broke below this area here, but below these relative equal lows, which is the reason why I said I want to see it trade below that one. Because some of you are thinking, well, why didn't you just trust it as a shift in market structure with this one here? You can. That's extremely aggressive. That'll be very aggressive. I mean, if I were using that, I would have already went short here at that low of that fair value gap, but because I'm electing to go to this one here, I want to see just how we have it right now. See how we have this candle's high and that candle's low? It's already set up to allow for that fair value gap to be there when the next candle opens in 15 seconds. And then I want to see it trade down, leaving it there, and then come back up into it, and then we would expect a repricing down into this sell side here, and then we'll see if we can get into these other ones. I'm not suggesting or trying to be that, dogmatic about it. I'm looking at a 5-minute chart. I was thinking that was a 1-minute chart, and I didn't have a chance to top it down. Well, there's the shift lower. We're going to drop down to a 1-minute chart. And we already did it. I got this morning talking to you about everything else on a 5-minute chart. Thought I was looking at 1 minute. Oh, fuddy-duddy ICT. Look what you did. Alright, so we had a fair value gap in here, which I would have been referring to. Unfortunately, I was looking at a 5-minute chart. That's what I was saying earlier. I didn't want to change and toggle stuff because I'm looking at all these time frames on my screens in front of me. And if I move things around or change stuff on this display as I'm talking to you live, I get disoriented. But you can see we went down where we were looking for. There's your fair value gap. And it also went up. I mentioned if I was using these up here, I would have used that as an entry going short, and some of you probably jump on that. But south side's resting below here. Okay. Now notice also how we were on that 5-minute chart, and I drew that fair value gap discount array over here. Look closer. You see how that right there is a refined imbalance where we can now change that and move it to here. Because that's where the 1-minute imbalance resides. That would also still be below this low. So it would be sell side below here and inefficiency there. Can you see that? There. So about to hit the sell side. And you see that low here? See that right here? Now classic support and resistance teaches that this is support broken here. Come back and touch the bottom of that, and it should act as resistance and go lower. Whenever I see a wick like that, I split that in half. And consequent encroachment would be the level that I would be expecting it to trade to. Sometimes these wicks are a little bit longer, more pronounced, which would require it to go up even further into and above an old low, and still be able to go off with lower prices later on. I would like to see this city here, all that one big candle between this candle's low and that candle's high. I don't want to see all of that close in. So even if it does reprice higher, I want to see that more or less remain partially, if not all of it, open. I'm willing to see it trade up into a little bit, but I don't want to see it entirely close in that. And I'm going to go back one candle so you can see the difference between where I'm anchoring. So that's this candle here and that candle here, respectively, is what I'm referring to. So we can trade it into that, up into here, but as much as half of that wick, which would be essentially 40.76 1/4. So if I'm watching price, say, for instance, say I was able to get off on a short up here, I would allow for and be completely comfortable with it trading back up to 76 and a quarter, or as much as this 40.76 and 3/4. It's just a matter of, when you guys ask me, how do you trust it? How do you know when to hold on to it? It's going to keep moving and not reverse on you. Well, nobody really knows, because at any time the market can be manipulated and it can railroad whatever's going on in the marketplace at the time. So you don't want to be so married to the idea that you can't allow for the uncertainties of what can happen in marketplaces where manipulation comes in. Something comes into the marketplace, whether some geopolitical upheaval, some act of war, some act of God, something happens that no one would realistically expect to happen, and then the market does something entirely unexpected. So you have to have that in your mind all the time, which right now we're in black swan season, which means anything can happen. Anything can happen that's unexpected and cause all kinds of damage. And everybody's model, everybody's concepts won't work for a short period of time where it just goes recklessly one way. All right, so looking for that sell side below 41.70 and 3/4, and to be gravitating and spike through into that 40.69 level. Main takeaway is we were waiting for the 10 o'clock hour. This is that silver bullet that I was giving you in the Twitter space. Some of the newer folks are like, what'd you say? Silver bullet. What's that? Silver bullet trade, ICT, is a setup that will form every single day. Every single day it will form. And what you're looking for is between 10 o'clock New York local time and 11 o'clock New York local time. There will be a displacement in a direction that you should be anticipating. Once that displacement occurs, you're waiting for a fair value gap to form. When it does, you're going to be expecting that to be traded into and then repriced to a pool of liquidity that would be opposing your entry. For instance, what we're outlining here. We've already seen a small minor delivery of it. I mean, it's been 5 handles or so since that run in here. But the expectation is for you to anticipate this formation in price every trading day. Every single trading day it will form, which is why I call it silver bullet. It's a move that will always be there. They will never be able to hide it from you. They're never going to be able to change it. Nothing's going to change it. It's always going to be there. There's never any reason for you to doubt that it won't exist. Okay, and it's also a way to train yourself patience, teaching yourself patience, sticking to a model and some rule-based ideas. And those being, you're looking for 5 handles. That's it. As a new student, as someone that's just now starting to become interested in the marketplace, it's a little intimidating, isn't it? Who do you listen to? Who do you trust? What do you waste your time on in the beginning and regret later on? And you want to avoid that. You want to go to the people that have the best stuff. You're thinking that there's a system or a teacher out there that's going to teach you how to never lose. They don't exist. I'm not that guy. So there's a lot of things that go through your mind when you first get involved in all this stuff. So I try to be as responsible as I can and say things like, you're going to practice in a demo. You're not going to trade with live funds. You're going to decide if you ever decide to do that. I don't ever tell you to do that. But I promise that you're going to see things in price that are very consistent. They're rule-based, structured approaches for you to go in and study, like a laboratory experiment. If I was to say to you, go out there and find some random fair value gap and pick a sell side or buy side liquidity pool, and good luck at it. Right away, 90% of you are going to be like, what am I supposed to do with that? This guy's not teaching me anything. Versus, okay, if I tell you, you hear my stomach? I'm starving. 2 days fasted. So if we are looking at a time window, very specific time window, 60 minutes, okay? Inside of 1 hour, you can find a 5-handle run that's reasonably easy, in my opinion. Now, of course, my opinion is biased because I've been doing it a lot longer than you. But out of all the things that I teach, I think that it's visually easy to see a fair value gap. It's easy to see that. But it may not be easy for you right now, but it's easier to see that than a breaker. It's easier, way easier to see it than determining what order block to trade off of. There's a graduation between one PDA array and understanding it to the next, but you only need one. And if you remember, I set that 2022 model up with my daughter in mind. Like, I wanted to see her use that model, and I didn't want to see any excuse for her to say, well, I can't see it because the fair value gap jumps off. It's literally there in the chart, and even someone with a short span of attention, if I spent time with them going through charts and showing it to them, they could see it, and they could go in the charts and find it in hindsight. But they don't have the experience to see it forming real time. And that's what these live sessions and that's what the Twitter experience with me is helping with. It does not remove the necessity for you to be looking and studying, not just on those instances where I'm taking your attention to, but other old moves and studying that and seeing it repeat over and over again. My stomach is talking. But the silver bullet is a time-specific setup that forms between 10 o'clock and 11 o'clock. I know you're already going to ask, why does it only work in 10 and 11 o'clock? Well, that's the morning session silver bullet. There's an afternoon session that I'll teach you later on. You got all year. Yeah, all kinds of tricks to show you. But between 10 o'clock and 11 o'clock, what you're looking at is the last portion of the move that's going to unfold just for that AM session. And you're right in the heart of the move. And fair value gaps are generally forming after But between 10 o'clock and 11 o'clock, what you're looking at is the last portion of the move that's going to unfold just for that AM session. And you're right in the heart of that move. And fair value gaps are generally forming after a move begins. There's an inception of a move that you missed. That's like selling short above old highs. You didn't get in it. You weren't able to do that, but you don't need that. Like I was teaching with the 2022 model, you don't need that to be able to do consistent setups. Between 10 o'clock and 11 o'clock, you are in the heart of the AM session move, which is essentially between 8:30 in the morning to 11 o'clock. It can go as far as noon, the beginning of the New York lunch hour, but consistent setups. Between 10 o'clock and 11 o'clock, you are in the heart of the AM session move, which is essentially between 8:30 in the morning to 11 o'clock. It can go as far as noon, the beginning of the New York lunch hour, but it's, again, a graduated thing in terms of time. There are macros that exist in price where between 950 and 10. It can go as far as noon, the beginning of the New York lunch hour, but it's, again, a graduated thing in terms of time. There are macros that exist in price where between 950 and 1010 in that 20-minute period, generally you're going to see a price run that begins within that 20-minute span. There's people out there trying to teach my stuff already in their little mentorships or their thing in the Discords and such, Instagram. And they're already trying to say, the move happens between 950 and 1010. You're already doing it wrong, so stop trying to teach my stuff. The move begins in those 20 minutes. It's not the entirety of, I mean, obviously it can, I mean, a fast move for a fast market, it can do that. But what you're looking for is a run that begins between 950 and 1010. That's the macro. It starts doing its run between those two time windows. There's another macro that exists at 1050 and 1110. There's two macros that start in those 2 hours. The silver bullet is specific to the 10 o'clock to 11 o'clock that start in those 2 hours. The silver bullet is those two time windows. There's another macro that exists at 1050 and 1110. There's two macros that start in those 2 hours. The silver bullet is specific to the 10 o'clock to 11 o'clock hour. And what we're looking for is an obvious pool of liquidity that has not been tapped into or engaged, which I've mentioned obviously with the lines here, you see it. You're not demanding that you capture the daily range. You're not demanding that it goes to your technical target. You're only expecting it to give you your 5 handles. Big paradigm shift there, because a lot of you also are taking this idea and trying to make more of it than it really is. Will there be times when that move is a significant higher low today and it just keeps on running? Yes, yes. But in the beginning, you don't know when they're going to be there. You don't know what that criteria is to cause that. That's a whole lot of other things that you have to learn progressively over time. So I'm reminding you as gently as I can to stick to the rules I'm telling you to stick to. And that way you won't be taken into these false expectations that it's going to do much more than it's designed to do. Case in point, fair value gap, I told you we extend that forward. When it was bumping up on the bottom of that, here, I was looking at the 5-minute chart. I thought it was a 1-minute chart because I was busy talking to you. I said I would go short there with the expectation of run lower. If you see that price there at 78 3/4, that's better than 5 handles. Did it take the sell side? No, but that's the structure that we use for draw and liquidity. Remember, I teach partials. I teach that you have to pay yourself. I teach you that it's just a way for you to frame your expectations on where the price should gravitate to. So go back up to the 5-minute chart real quick. So here's the low I was anticipating a draw to. Fair value gap here on the 5-minute chart as it went up into there. So as we hit that, if it were not seeing the relative equal lows here, we didn't have the relative equal lows, it was just one singular low, that would be an aggressive entry for me and it would be where I told you. And it delivered immediately, as I said it, attacking this short-term low. It offered more than 5 handles. That would be it. Now, compare and contrast. I know some of you probably already in this trade, and you were probably holding on for this sell side, and this probably just worked against you. Don't take the trades. You're learning how to read a tape. Everything I just explained to you has not been explained anywhere else about this type of setup between 10 o'clock and 11 o'clock. You didn't have that insight before you pushed the button. You had no idea what you're doing. You're impulsively trying to do something based on what I'm saying real time, instead of learning the lessons from watching and listening to what I'm expecting, what rules are there, what parameters are there. You can't learn doing what you're doing by pushing a button. You can't do that. You have to learn it and then go practice with it. Go look for it in old moves. That's the order of things. You don't learn how to do it by listening to me and trying to do it as I talk about it. That's not how you learn. So anyway, the delivery of 5 handles, that's the easy, absolute, 100% guaranteed time-specific setup that if you're a brand new person or someone who's coming to this channel for the first time, a setup that forms so consistently, so routinely, there's so many things that are inside that model, and it's a complete model. It's an entire model in and of itself. Think about what it's offering. You don't have a whole lot of time? Okay, no problem. You want to do this while you have your day job? Does your job permit you to have a lunch hour early in the day between 10 o'clock and 11 o'clock? Because if so, I would take my lunch then. That way you're not stealing time from your employer. You're being a good steward, and your time won't be divided, or your attention won't be divided during that time, because you'll be expected to do what you're being paid to do by your boss instead of watching candles form on your charts. If you are looking for a way to not spend so much time in front of the charts, which I can tell you is a good thing because it's fatiguing over time. I don't care how much money you make, it's still very fatiguing to do it. It will wear on your eyes, it will wear on your back, it will wear on your body and your stress. So you want to kind of keep it to an optimal level. And I can't find a way to be more optimal than a 1-hour trading workday. Between 10 o'clock and 11 o'clock, you absolutely know that this formation is going to be there. It's going to be there. Now, does that mean that you're going to have a winning trade every single day between 10 and 11 o'clock? Absolutely not. Absolutely not. It just means that you have an opportunity to have something that statistically is there all the time. And I don't want you to take my word at this. I want you to go back and look at every single trading day you can have data on and go through and see it's there. Now, what you need to practice is understanding, as I mapped out this morning, you don't need to be right about your levels. You just need to be right about, does it offer the range? Does it offer something better than 5 handles? Now, what you need to practice is understanding, as I mapped out this morning, you don't need to be right about your levels. You just need to be right about does it offer the range? Does it offer something better than 5 handles? Because if it can move better than 5 handles, chances are you probably will get 5 handles out of it. What do I mean by that? When we were looking at this fair value gap here, and it was bumping up and against it here, I said, okay, if we didn't have the relative equal lows here being specifically this low and that low, what was my apprehension? Because this could be a run lower, take the sell side out, and then rip higher and complete that new week opening gap high here. So it's not a singular low, it's relative equal lows. So there's going to be sell side below that. So they went down below, yes, but I wanted to see this low taken out. That was what I would have been preferring, rather. But an aggressive entry would have been right here. Does it offer 5 handles? Sure. Did it get to the sell side? No. Does it mean rather the model's broken? No. You're operating inside these rules with the expectation that it's going to offer you 5 handles. You might not get it. It might be an instance where you're watching price and you expected to do something like what I was looking for, and it might not deliver it to you because your parameter, your entry, your limit order didn't get tagged in. You can't look at that as a reason to be upset. You can't be thinking, well, I wasted my time. How many 10 o'clock to 11 o'clocks in the future are going to be available to you? As long as you have breath, right? As long as you have your mental faculties and the markets are open, you have lots of those laboratory experiments to work with now. Will it take you 2 years to grow confident in using this as a model? I don't think so. But I think about 2 to 3 months is realistic because you want to see previous data to confirm what I'm suggesting to you is valid. Then, when you see all that, then you'll feel comfortable with investing the time of walking forward with it, tape reading it. And you do that for several months. That way, when you're bored of it, and you see it, you're not emotional about it, not nervous, not excited because it moved in your favor. You're just completely indifferent to the outcome. That means you're bored. That is the only time that if a trader you in tape reading it, and you do that for several months. That way, when you're bored of it, but I think about 2 to 3 months is realistic because you want to see previous data to confirm what I'm suggesting to you is valid. Then, when you see all that, then you'll feel comfortable with investing the time of walking forward with it, tape reading. And you do that for several months. That way, when you're bored of it, and you see it. You're not emotional about it, not nervous, not excited because it moved in your favor. You're just completely indifferent to the outcome. That means you're bored. That is the only time that if a trader thinks like that, then they can entertain the idea of maybe putting real money at work. But that's a decision that you determine that. And when is it going to be where you're bored? It's all completely objective from your perspective only. And it would be foolish of me or anyone else trying to be a mentor or a teacher to say you're ready when this and this. No. The only defining determination is you know that you're not emotionally stimulated by the outcome. You're not chasing a feel-good movement. You're not trying to replace a bad experience with a good win. And you're just following the rules. And that's a very hard thing for you to understand, especially if you're new, because you don't have any rules. You don't have any experience. You haven't seen this form in previous data enough times to know that what I've said exists every day. Between 10 o'clock and 11 o'clock, identify liquidity, find a fair value gap. The fair value gap has to be opposing, in other words, opposite to the direction that you anticipate the liquidity to be drawn to. For instance, fair value gap after displacement lower, we wait for it to trade up into the fair value gap and then trade towards a pool of liquidity, lower in the form of sell side. If you're bullish, you're looking for the market to trade higher, displacement higher, leave a fair value gap below market price, then trade down to the fair value gap, and then gravitate towards a pool of liquidity, which will be buy side that hasn't been engaged yet, and it has to have better than 5 handles in terms of the range from where you think it might get to. Not that it needs to get there. Remember, I'm teaching you how to look at price, removing the necessity of being right, because right is not a destination. Being correct is not a destination. Excellence in execution is, and it has a very small five handles in terms of the range from where you think it might get to. Not that it needs to get there. Remember, I'm teaching you how to look at price, removing the necessity of being right, because right is not a destination. Being correct is not a destination. Excellence in execution is, and it has a very small population. The only way you get to be a member of that is by doing the things I'm telling you to do and avoid the things I'm telling you to avoid. But many times, even my own flesh and blood, they don't want to listen. And I don't understand. I don't understand it. It's like you all have to have that painful experience for you to, you're part of the club now. I want card carrying members that said, I didn't have to reset my account. I didn't have to do a refunding of account. I didn't have to go back to the drawing board dozens of times. I want to spare you that. I had to do that. You don't need to do that. And a lot of times it's because you hear me say certain words or talk a specific way or carry on the way I do. Some of you try to do that stuff. Like it's like you're a clone of me. And you definitely don't want to be a clone of me when I was my younger self, because I had no idea what I was doing. And the way I teach is to prevent, at my best ability. In my mind, I'm thinking I'm doing the best I can, but it frustrates me because I don't see majority of the people that I know are problematic. Because when they start talking to me, either in Twitter or they talk to me in my private mentorship, I already know by the questions they're asking or the things they comment on, their perspective is all messed up. And I know they're going to be the problem children in my community. Not that they're going to be trolling. Some have and they've been removed, but I've also had people that are just problematic. They just don't want to listen no matter what I tell them. And I can sit here and tell you what's going to happen every single day, and they would be going against everything I'm doing. And then saying they don't understand why it doesn't work for them. What? Like, it makes no sense. It makes no sense, but yet it goes on all the time. Even in my free community. If you're honest, okay, and you're listening to me, if you have faded anything I've ever said, even though you've seen me call these things very accurately for a long time now, have you ever faded it and then looked back and had a bad experience doing that fading and think to yourself, why did I do that? Like, what was I thinking? Like, I want to know too. Like, what were you thinking? I'm not trying to beat anybody up, and I don't want you to put, like a proverbial bullseye on you for being trolled. None of you should be trolled, but I know there's a lot of you that are just quietly doing it because you think that the market's moved too far. It can't be likely to go to that next level. It's already moved so much. Why can't they come back for the stops? Why can't they come back for the stops? Why can't they do this? Why can't they do that? Because you're thinking in terms of buying and selling pressure. You're thinking in terms of overbought, oversold. I don't think like that. I don't teach like that either. I teach the market's going to seek liquidity or inefficiency. And when a buy model begins, like we did on Tuesday, on the heels of me talking about me being specific about the buy side only on Monday's video, go back and watch the YouTube video, folks. Yes, right now at the time it was ambiguous. It could have been either way, but I said, like I always do, I always pick one side unless I say I don't know, and sometimes it's a fair assessment. Sometimes I don't know, and I tell you I have to wait for more information. But Monday in that video, at 1.5 minutes in, you'll see me go into a hourly chart, and I'm targeting the buy side. I said that's what I'm interested in going forward. I can't edit the video; it's already there. It's done. There's no sell side mentioned in any of the video. I mentioned why can't they come back for the stops? Why can't they do this? Why can't they do that? Like a proverbial bullseye on you for being trolled. None of you should be trolled, but I know there's a lot of you that are just quietly doing it because you think that the market's moved too far. It can't be likely to go to that next level. It's already moved so much. Why can't they come back for the stops? Why can't they come back for the stops? Why can't they do this? Why can't they do that? Because you're thinking in terms of buying and selling pressure. You're thinking in terms of overbought, oversold. I don't think like that. I don't teach like that either. Teach the market's going to seek liquidity or inefficiency. And when a buy model begins, like we did on Tuesday, on the heels of me talking about me being specific about the buy side only on Monday's video, go back and watch the YouTube video, folks. Yes, right now at the time it was ambiguous. It could have been either way, but I said, like I always do, I always pick one side unless I say I don't know, and sometimes it's a fair assessment. Sometimes I don't know, and I tell you I have to wait for more information. But Monday in that video, at 1.5 minutes in, you'll see me go into a hourly chart, and I'm targeting the buy side. I said that's what I'm interested in going forward. I can't edit the video; it's already there. It's done. There's no sell side mentioned in any of the video. I mentioned discount arrays, but my focus was on higher. Now, did I think it was going to be a one-way train from Tuesday all the way up to where we've seen it trade today? No, I did not. Like, it's doing some wonky things this year, and it's been very, very difficult for me to go in and do what I'm used to doing, which is a lot of back and forth, big runs, easy. Just look at this. It demands a whole lot more focus because it's a lot of back and forth whipsawing. I mean, look at what we've seen already here today. It's all over the place. And I mentioned this morning that it was light on Twitter. I said it's probably going to be a difficult session. Just lower your expectations. Now, you'll hear and see people after the stream ends. Here's what I did, but they didn't say anything beforehand. And I'm trying to be the voice of reason. Don't buy into that kind of stuff because your results are going to be based on what you're seeing on that right edge of that chart. When the candles haven't formed yet, that's where you're going to reside as a trader. You can't make money on the left side of that chart. It doesn't work like that. And right now, you're scared. You're intimidated by not knowing what the next candle is going to do. Is it going to rip your face off? Is it going to go and get you stopped out and then run in your favor without you being a part of it? That's all normal. Everybody thinks like that in the beginning. And if you feel like that when you start trading with live funds, you haven't traded in demo long enough because you're now still keyed up about the results. You have to be right. And demo is there to determine the time window when you're no longer interested in being right. You're interested in following the rules. Whatever they Everybody thinks like that in the beginning. And if you feel like that when you start trading with live funds, you haven't traded in demo long enough because you're now still keyed up about the results. You have to be right. And demo is there to determine the time window when you're no longer interested in being right. You're interested in following the rules. Whatever the outcome is, you're following the rules. The rules say this. The rules say that I take profits partially here, and then I move on my stop loss. I'm not trailing my stop loss. I never open my stop up larger. Once you put a stop on, it only reduces in risk. It never opens back up. Never, never, ever, ever. It's better for you to just collapse the trade. If you have the impulse in your trade and you feel like you want to open the trade up with more risk because you trailed it too tightly, just close the trade because you've already lost the plot. I promise you that will serve you better than a few times that you're going to get out and it runs in your favor. That won't happen most of the time. As soon as you start feeling like that, that's your subconscious telling you, you've been here before. You've been here before, but you want to be right. So now you're wrestling with being right and the experience that you remembered subconsciously that this is exactly what you did the last time and it stopped you out. But you now have committed yourself to this idea. It has to pan out. It has to. There's no other way for it to happen. Now what are you doing? You're imposing your will. And imposing your will with a market like this, it will break your arm off. You can't arm wrestle and win it. You can't. But in the beginning, you think you can. And the younger men, like I did when I was 20, I felt like I could do it all. And it was very, very hard to learn these lessons. In time, you'll learn how to anticipate these types of moves where it's choppy. You know when it's going to be difficult. What makes it difficult this morning, by the way? You're probably asking, how did I know to tweet that it was going to be a difficult session? What sets the tone for that? Well, the fact that we've climbed so far up, not for the basis of overbought, but because we traded two. We traded two, an old high, March 6th, okay? We went into the order block or the opening price of March 6th, daily candle. We have moved essentially parabolically from Tuesday, one direction, with no real retracements lower. And I know some of you are thinking, all this bad news is out there right now. It's got to collapse the market. It's got to create a crash. It's got to create a crash. I want to remind you all that when Venezuela was going through its, downturn and essentially collapse, its market was going up. It wasn't affected by that. Like you might think that it would be a catalyst for a stock market crash. It doesn't work that way. They can take your money from you and the stock market will still go up. They can make things hyperinflated and the market will still go up. Why? Because it's not controlled by buying and selling pressure. Hello. Anyway, if I were not teaching, if I wasn't mentoring like I am this year, this is a day I would have stayed in bed, slept in, and not worried about it. And let me give you a little more details as to why I felt, because I don't feel like I've even satisfied myself about what that response was. So let's go over here to take all the lipstick off. Let's go to a daily chart. Okay. If you go to the video I put on Monday evening this week, I believe it was 27. I can't draw anything. As soon as I draw it, it'll bring all the other stuff up. But just follow my cursor along. I'll leave it still for a second so you can track it. Okay, right there. That down close candle right here. I had that annotated on my chart on Monday evening. That is a fair value gap, sell side imbalance, buy side inefficiency. So the market has reached up into that. We traded into the opening price of it with this candle's high, and we traded into a new week opening gap. That is also, if you take, this is also for your notes too. It's one of those new week opening gap tits. You take the old order flow areas. Okay, before we even traded up here, you can see that this is a swing high. What you want to do is look inside that swing high. Where does the new week opening gap exist in that old order flow? Much like if you look at this old low down here, where does the new week? So the market has reached up into that. We traded into the opening price of it with this candle's high, and we traded into a new week opening gap. That is also, if you take, this is also for your notes too. It's one of those new week opening gap tits. You take the old order flow areas. Okay, before we even traded up here, you can see that this is a swing high. What you want to do is look inside that swing high. Where does the new week opening gap exist in that old order flow? Much like if you look at this old low down here, where does the new week opening gap that rests inside that order flow? Where's the new week opening gap in here? Is there one in this consolidation? And you're going to see how the market really accumulates algorithmically with that new week opening gap. You're going to struggle with order flow. Where's the new week opening gap in here? Is there one in this consolidation? And you're going to see how the market really accumulates algorithmically with that new week opening gap. You're going to struggle with all these different new week opening gaps in your chart in the beginning because you feel like you have to have all of them. You only have to have 5. You only have to have 5 of them, okay? But the secret to it is, and one of them, there's several of them I'm going to teach you, but one of the easiest ones is when you look at old order flow, like this old area of consolidation high back here, what new week opening gap runs through that? Because that's the fair value that it's going to trade back up into later on. In addition to the individual opening gap runs through that because that's the fair value that it's going to trade back up into later on. In addition to the individual order blocks itself. See, these are
Dang, that's some sauce.
the things that I always tuck in deep in the boring lectures because I don't want to just give it to anybody. You're going to have to put some effort into it, listening, going through the motions like any other student with due diligence. This stuff's too good just to be tossing it around on Twitter, tossing it on a short or a 5-minute training on ICT in 5 minutes. You can't do what I do. Your students that are learning from you are learning from me. And when they don't do as well as they would be if they were under my hands, that's not my stuff failing. That's you failing to know everything that I know about my own concepts. Sorry if that hurts. But because we've had one-way delivery, we have done multiple premium arrays. Rejection block, here, a closed candle, closing price, we went through that. Consequent encroachment of the wick, we went through that. The old high, we went through that. Consequent encroachment of the SIBI, here, went through that. All the way to the low of this candle, which is the low of the fair value, I'm sorry, not, it's the high of the fair value gap, but it's the low of the order block, which is the closed candle prior to this displacement. So that low, we traded to that and through it. We traded up to the closing, I'm sorry, the opening price of that candle here. So the body of the order block, we traded into that. And then inside of this range of this old high, we have what? A new week opening gap that runs right through it. And that's where we traded to. Now, what has the market really done? Nothing. Stop talking. Trade. Push a button. I'm pushing all the buttons so you understand what it is I'm teaching you. You want to read price without me? I want you all to be able to say, it was been fun, second week in November ICT, but you know what? I don't need to come back to the YouTube channel. I don't want you to come back here and get me any ad revenue because you've learned how to do it and there's no need to come back here anymore. Okay? I'm not going to produce all kinds of content on a day-by-day basis, a weekly basis. I'm done. Okay? I'm done. And I want you to do well. And I want you to be comfortable and know all the things that have to be considered in these types of climates, these market conditions. What makes it hard? We've already traded up there, but I'm not trying to pick a top. My students know I do not try to pick tops in bull runs. I don't do it. I don't. And if you try to do that, you'll have your face ripped off. And that's not the system or the concepts failing. It's you trying to do something I told you not to do. But you'll have selective hearing, and you'll insist that it's my fault or my concept's fault when you're doing it wrong. My own flesh and blood are showing that human shape. It's mind-boggling to me. I don't understand it. I don't understand. I don't. So we swept the rejection block here. And this candle here, we went above that. We went above the opening range gap high, which is the 930 opening price. Now we're back inside this fair value gap. Now it's basically do or die because we're inside of the breaker. Here that would be a bearish breaker. So we have mean threshold of that, which could be inversion. And we have the old fair value gap here. We want to see how it respects that. Does it want to offer support or does it go through it one more time and offer resistance? Let me take this off here. Take this off. Very, very, very difficult market conditions. I don't care who they are. I don't care what accolades they have behind their name. If any of the traders in the communities, whether it be ours or abroad, if they ever come out and say that these market conditions right now are easy, it's so easy, they're lying. Trust me, they're lying. Anybody with real experience has been doing this for a long time. They understand that this is really difficult price action. It doesn't stay like this, but there are going to be periods in the future when it frees up and starts moving around a little bit more. We'll enter another period where it's very difficult. And this is where the legends shine. The people that know what they're doing and how to navigate it, this is where they shine. The people that have just been doing it for a little while, had potluck wins here and there, chance wins, got lucky in the beginning, they have no idea what's going on. They're going to flounder. They're going to be reckless, overtrade, do foolish stuff. And people that are boring, okay? That's the key word, boring. They're just really consistent about what they're doing. They're not trying to be flash in the pan, success stories overnight. They're not trying to promote the get rich quick stuff. Generally, those types of people are going to be able to do well in these conditions because they know the dial back risk, dial back leverage, dial back frequency. That means do less. Less in this environment is more. Gonna be reckless, overtrade, do foolish stuff. The period where it's very difficult. And this is where the legends shine. The people that know what they're doing and how to navigate it, this is where they shine. The people that have just been doing it for a little while, had potluck wins here and there, chance wins, got lucky in the beginning, they have no idea what's going on. They're going to flounder. They're going to be reckless, overtrade, do foolish stuff. And people that are boring, okay? That's the key word, boring. They're just really consistent about what they're doing. They're not trying to be flash in the pan, success stories overnight. They're not trying to promote the get rich quick stuff. Generally, those types of people are going to be able to do well in these conditions because they know the dial back risk, dial back leverage, dial back frequency. That means do less. Less in this environment is more. Because the chances of you doing something correctly, especially if you're new, it's probably slim to none. And then you compound that with once you do it and you do it incorrectly and you hurt yourself, you want to try to hurt and get it back right away. Well, you might be able to get lucky doing that when it's a faster market that's trying to get somewhere that's obvious. But it's not that kind of market right now. It's a lot of whipsawing, consolidating, not making obvious runs. And it's not then changing anything. It's sloppy. It's just the market comes in these phases where it's like it does this sometimes, and all of a sudden some kind of event will free it up and we'll be moving all around. And trading will become easier. If you have a losing trade, it's easy to mitigate that. It's easy to fix those. It is not easy to fix drawdown in these types of conditions. It's very, very difficult. And anyone that tells you otherwise is full of shit. I'm telling you, 30 years doing it, I'm telling you, there ain't no body out there that's going to tell you that this is a market right now that's easy. It's absolutely grinding people down. And you're new, and you're thinking, you should have learned how to do this already last week. Not realistic. My best students know when it's like this to be careful, to be almost still, doing nothing, waiting. Market's going to gyrate, it's going to move all around. But it doesn't mean that you have to be a part of that. It just means that you have to exercise patience, self-control, because if you can't do those two things, the market will usher you out the door, and you're leaving without your money. You're leaving your account balance in the marketplace, and you're going home broke. And you see all these success stories. The market's going to gyrate, it's going to move all around. But it doesn't mean that you have to be a part of that. It just means that you have to exercise patience, self-control, because if you can't do those two things, the market will usher you out the door, and you're leaving without your money. You're leaving your account balance in the marketplace, and you're going home broke. And you see all these success stories, that are coming to you. And I have an interview I'm going to put up tonight. I got 3 scheduled to do for next week, but they won't all be released next week, obviously. It's hard for me to find all the time to do all this stuff. My wife's asking me to do things, kids are asking me to do things, and spring's coming up, and we have travels. So I'll be doing the RV playlist. You can see when I'm on the move and what I use when I'm on the move in the RV, how my system looks compared to all the screens you've seen when I'm home. But don't look at these success stories and think, I'm going to go out there and do that right now because I want to have an interview with ICT. I'm not that big of a deal. Okay. If you succeed, great. I want to talk to you. I want to let your story be seen and heard. But do not think, I'm getting motivated by this. And right now, think that the market is easy for you to go out there and do that. It's not. I promise you, sincerely, right now is very, very difficult. Even for me. Even for me. I'm used to seeing all kinds of moves up and down all day long. And I'm not seeing it. Maybe one relatively decent entry. And it's a lot of whipsawing. And eventually goes to a level I would anticipate. But I wouldn't be willing to sit in. So if it's like that, when in doubt, stay out. It's a very simple rule. But in the beginning, and you'll probably nod your head when I say this, in the beginning or when you're new, when you're doubting it, you think, oh, I got to go in there and just overcome my fear and just press the button. Well, play stupid games, win stupid prizes. And if you do that with your funded account or your live accounts, you found out that that's not the smartest thing in the world to be doing. You should have stuck to your conscience telling you, I really don't know what to expect, and I'm uncomfortable, and I don't have the wherewithal to just turn the charts off, which is what you should be doing on a day like this. Who cares where it goes when it does? You would have never been able to be nimble enough to get in if it does make a big move. So I teach with that perspective. I don't want you going into the marketplace thinking with a false sense of security that you can just go out there and slay everything in a market like this. I know my limitations as a mentor. I know it. I don't have a student guide, a lecture, a teaching approach that my students can reach to that makes these environments easy to trade. But what they do have is lots of lectures where I'm jawboning and beating this into their head saying, this is where you don't want to be trading. Can you recognize that? I mean, for the folks that just started under my 2023 mentorship, okay? Can you see the difference? Can you feel the difference watching these candles paint like this? Versus when the market's really just liquidly moving up and down, it's gyrating, it's going to liquidity, that's obvious to see, it's going to imbalances, that's easy to see, it's elongated, it's stretched out, it's moving around, a lot of movement. You're not seeing that right now. You're seeing this. This is stagnant price action. You cannot look at this and think, oh yeah, this is exactly what I want to trade. You do that with this, you're losing your account. There's no easier way to give you a representation of what to avoid than seeing this. This is it. This is the stuff. This is the molasses swamp. Okay. Remember the children's game? I grew up playing a board game called Candyland, and I've used that expression when I'm talking about liquidity above relative equal highs and relative equal lows. Well, in that board game, there's a little area called molasses swamp, or at least the old version did. I don't know what they've made it up to be now, but it used to be molasses swamp. And if you ended up in that, you were stuck there. Well, this is what this is like. You're in quicksand, and the more you do to try to get out of struggling, sinking in quicksand, it makes it worse, and you sink. That's your account going lower. So when you have conditions like this, books don't do enough, folks. I'm telling you, books don't do enough to teach this mindset. When you see things like this, there hasn't been a book out there that I've ever bought or even read, and I have over 2,000 of them. They never talk about these things because they're trying to promote an idea of you getting into something, not avoiding trading. The whole idea of selling the book, the course, the authorship of something, they know how to get in a move that works, but they don't know how to avoid. The moves that blow their account, that draw them down, that are struggling points. I've been around here long enough to know what that is, and I know how to communicate it. I know how to show it to my students, and the ones that have gotten it, they don't blow their accounts. They don't lose their funded accounts. They don't do those reckless things. They see this and they say, okay, you know what? It's a lovely day outside. Even if it's raining, I'm going to go do something else. But you don't have that when you're new. You feel like you got to be doing it. You got to push the button. You got to trade. I'm watching the dollar index. It's still ranging between 102.20 and 102.10. Just really not doing a whole lot. Now, let me make an argument for something here. In a day like this, I would favor the afternoon session. It might do something in here that's animated, and you'll say, but you didn't do that. That's wonderful. I don't care. You're welcome to have your opinion. When you're new, it's easy to see four-handle runs and think, well, that was a move right there. I thought it was going to go down there, and he didn't even talk about that. You didn't trade it. You didn't put a stop loss in and manage the risk in it. You're talking about what you saw happening. I've been calling a move. I've been calling this. I've been calling that. In these environments, that's fine. You can call and paper trade and tape read all you want. That's the most of it. That's all you should be doing. You shouldn't be in here pushing a button in an environment like this because the risk is undefined. Where are you gonna limit your risk? Where's the risk? Low and defined, where it makes sense. Where's the next draw on liquidity? I don't know. What did he just say? What's the calendar? I gotta write it down. ICT on live stream just said he doesn't know right now. That's not the first time I've said that. I don't know where it's gonna go to next. So if I don't know where the next draw on liquidity is, how the hell do you think you're gonna know it? Well, that's arrogant. Well, if you're here trying to learn from me, how are you gonna know? If you're right, it was luck. If you're wrong, it's regret. Either way, it's something to be avoided. There's nothing to frame this in high probability that it's going to go higher or lower. I don't know. right now. That's not the first time I've said that. I don't know where it's going to go to next. So if I don't know where the next draw on liquidity is, how the hell do you think you're going to know it? Well, that's arrogant. Well, if you're here trying to learn from me, how are you going to know? If you're right, it was luck. If you're wrong, it's regret. Either way, it's something to be avoided. There's nothing to frame this in high probability that it's going to go higher or lower. I don't know if it's going to take out the 40.71 quarter. I'm sorry, then 3/4 level down here where the sell side is. I'd like to see it. I'd like to see the dollar go up to the level I told you. If it goes down here, if it was to do that during the live stream, it would still be me saying that would be a trade that I wouldn't be in. But you would log it as experience. It can run up here and take out 40.90 and go to 41.04. I won't be in it. I'm not going to trade it. I won't participate in it because it's showing me every reason why I should not be touching it. And again, for the people that are new that don't know what that really means, is it's not respecting anything. It's just chopping around sideways. And I promise you, you go on YouTube, anybody that's live streaming and they're doing this market here, they're getting slopped up and chopped up. I'm probably cussing, ranting and raving, or killed their live stream, regretting they even went out here. And I told you this morning that we would have what? A tough session. Because the move was delivered before, and I told you where it was going. What, 8 handles, 9 handles, almost 10 handles this morning before the news even came out at 8:30. If the moves are going to be clean like that in the early session, and you reach targets like I've explained on the daily chart, we will have this. This is consolidation, potentially rolling into seek and destroy. Seek and destroy is a day where you will not make money. You'll go long, get stopped out. Okay, go short, get stopped out. Okay, I'm wrong. I know where I'm going now. Let's go long, and you get stopped out again. And then at that moment where you've done lost too much because you used more leverage to try to get back your little paper cut losses, you're afraid to get into the next one. And that's the one that you don't enter, and it's parabolic, and it rips the face off of everyone else, but you weren't in on it. And it leaves you feeling demoralized. I've fallen victim to that a lot as a 20-year-old. And I know where they're forming now. And I teach. It's in the core content. It's right on my YouTube channel. It's all part of my language. But just because you watch that video doesn't mean you know how to do it right away. You have to be in a mentorship like this, where it can be explained beforehand. What are you expecting? What do you expect, ICT? What do you think the market's going to do? I've already taught you how to make money. I've already taught you how to be precise about your entries, how to find your targets. That's already on my YouTube channel. It's been up there. It's been up there. The reason why you failed is because you're pushing the button in environments like this. This is what's done you in, not my concepts. It's the market that isn't going to move for anyone, not even for me. So, am I foolish to say I have really strong technical tools and concepts? I'm the market maker beast out there. Look at me. I'm Mr. Everything. And I'm going to be able to do something in this. Hell no. It ain't doing anything. It's not doing anything but hurting people. So, I know, because of 30 years having done this, I know where I hurt myself. And I don't need to walk down that road and have my arm ripped off by that pit bull that I know is sitting there waiting for me to pass by it again. I've done it 95 other times. I need to go there on a 96th time to know that. And that's not my story. I picked that up from Larry Williams. It just works. That analogy worked. It made sense to me. But how many times do you have to see a questionable market condition and you think, I see a fair value gap. I see relative equal lows. That's what my son's seen. And he arm wrestled it, and arm wrestled it, and arm wrestled it. Just let me do it, Dad. Just let me do it. Okay, it's your money, bub. And every time, blink, blink, order filled, order filled. Looks at me. I ain't saying as much as I want to say it. I ain't saying I told you, but he has to feel that pain. He has to feel that pain. So I'm done trying to prevent it. I tried my best to help him avoid it, but we have been calling this thing on premium arrays. And if you fight that, you're literally playing Russian roulette with 5 bullets in 6 chambers. What's the odds of you succeeding and making it out alive? Slim to none. And unfortunately, the human body, the human mind, the psyche feels like they have to be able to do it themselves entirely. Like most of everybody that gets into trading. Oh yeah, I saw this guy, man. He's got this YouTube channel. He talks about these things that you can go in and you buy. The order blocks. Everybody knows the order blocks. They're free. And you got to you rush. Try to get funded accounts, open up live accounts, do the whole show, over leverage little account balances. And you discover you're trying to do something that you don't know how to do. And you rushed into a condition with real risk, and you weren't prepared. And then that toxic loser cycle begins. You don't realize it, but so many people have gone that route. And it's toxic. It makes you doubt everything. You become a troll. You ain't making any money, but you'll go online, pretend you are. And you talk about everybody else, but you can't do anything. And I've seen people go to the extreme, and they check out of this world. That's how bad these things can hurt you. And I'm doing everything I can. Like, I don't know another way to talk about how to avoid these types of things. I mean, look at it. Look what it's done. I sat here with the entire, way beyond what I want to spend time with you. But I'm trying to hammer it down, let you know that we can see when it's going to be a good day. Okay, as a community, I'm guiding all of you. I know when the salad days are there, when it's going to be easy trading. I also know where it's going to be difficult, even for me. And when I say that, guess what that means? Don't open your live account. Don't. Just because I'm live streaming does not mean, okay, it's casino time, let's go. I trust ICT, he's always right. Look at him, he's always right. I'm right today. It's going to be an ugly day. Tough morning. I showed you the silver bullet trade. I was wrong with the sell side, but still offered 5 handles. That's the rules. That's it. That's the thing that you're looking for as a trader, but you don't want to accept it because you want 50 handles, 100 handles, 20R, 50R trades, or that ain't success. Let me tell you something. 5 handles a day, I don't care how you are in the money. That's good money. That's good money. If you can consistently do that every single day and be content with it and just stop, who says you have to trade more? Who says you ever have to do anything beyond that? If that's all you ever arrive at, under my tutelage, if that's all you could get to, that's not failure. You're doing way better than 99.999% of everybody else because they have no idea what they're looking for. They're reacting to price. They're waiting on some kind of indicator to tell them it's doing something. When we know when the trade's going to form, ask the people that use indicators, what time is that indicator going to give you a buy or sell signal? And laugh, because they're not going to be able to tell you. They're never going to be able to tell you that. But we have a specific element of time that's advantageous to us. We know what we're looking for, and that should be encouraging. It should really encourage you. When's the indicator going to give you your buy or sell? I wasted years trying to crack that, and there's nothing in that. So I'll revert back to what? Open, high, low, and close. What time do these things occur? And I went through all kinds of markets, all kinds of data. I spent so much money on every aspect of data, studying, looking at old moves. Most of you would never do that because you want to do the next move. I ain't got time for that, ICT. Ain't nobody got time for that, ICT. We got to be getting funding. We got cars to rent, villas to rent, and say we live there on social media. I'd like to see it get up there in that 40, 89 and a quarter level, but I might be asking too much of it today. So think about this. Imagine if I was to say on social media, like on Twitter, this morning, say, look, man, all right, boys, it's going to be easy today. Get ready. Back the truck up. We're going to rob the banks today. And then it did this. You might not make fun of me like some people try to do foolishly, but you'd be doubting me. Like he said, it's going to be a real easy day. Look at it. It just was like crummy. If he knew there was an algorithm, then he should have expected it to be like this. Now, contrary to that idea, this morning I said that we're going to have a very tough morning. Lower your expectations. Now, my long-term students know exactly what that means. Chop. Slop. When you want the salad days where you want to get in there and bebop. Easy runs, easy targets, easy this, fast money, easy, easy, easy. That's coming. But it ain't happening yet. And you have to submit the time. See, you're taking your impulsiveness about needing to make more money to keep up with the social media people you're trying to keep up with. And that's the wrong way of doing it. You're taking that impulsiveness that you have to feel like you've arrived. You got to find significance on your social media equity curve. And the only way you can do that is by what? Making money. Finding trades. And you're finding out that it's very difficult right now. And guess what? I'm the type of guy to tell you it's hard for everybody. And when we can anticipate these things being difficult, it's not a guess. These things repeat. These rules are there for you to anticipate when it's going to be hard. And those are the times when you don't risk a lot or don't trade at all. Or, in this case, what we do is we anticipate the morning's going to be sloppy. Let it go and do whatever it's going to do. Who cares? I promise you, you probably know 5 people online that are kicking themselves because they went in today. I promise you, if they're being honest, you know at least 5 people. And you probably are following people that are complaining right now. Oh man, this market sucks. I got chopped up, I got beat up. And here we are, in good hands. This is the stuff that should be in books, but isn't. This is the stuff that should be in mentorships, but isn't outside of mine. You can't make money long term if you blow it all on days like this. Everybody blows their account on a one-day event. One day, something happens in that one day that completely derails you. Either all the equity's blown in that one day, or it starts that chain of reactions over and over and over again. Now you're caught up in a loser cycle. But predominantly, it's a day like this that you think, okay, it's going to go up. No, it's going to go down. Okay, it's going to go up. It's going to go down. You're not going to use a stop. You're going to over leverage. You're going to trade bigger than the last one because you only need a small little move to get back what you just lost on. And that small little move becomes a death by 1,000 paper cuts. Yes. Yes, it will happen to you. And I'm doing everything I can to teach you how to avoid that. And some of you just want that war scar, like it's a badge of honor. That brotherhood is something I wish I wasn't a part of. I wish I could have avoided it. I wish I could have had someone like me talking to you like this, showing you in a chart, real time, before it happens, it's going to be hard, it's going to be struggle. It is what it is. Because I wouldn't have blown as many accounts as I did when I was a young man. I would have not had all the adversities and fear of never being able to do it, suffering from the losses, stress trying to earn all back to get another account funded. That's stuff that's easily avoided. Like, you have all the advantages now. You, this generation, You have all the advantages, but you don't see it like that because you're spoiled. Everything happens real quick on a smartphone. So therefore you think everybody owes you something immediately, and you should never have any hardship. And you think everything's going to be easy for you. Well, welcome to the reality. Could have avoided it. I wish I could have had someone like me talking to you like this, showing you in a chart, real time, before it happens. It's going to be hard. It's going to be struggle. It is what it is. Because I wouldn't have blown as many accounts as I did when I was a young man. I would have not had all the adversities and fear of never being able to do it, suffering from the losses, stress trying to earn it all back to get another account funded. That's stuff that's easily avoided. Like, you have all the advantages now. You, this generation, you have all the advantages, but you don't see it like that because you're spoiled. Everything happens real quick on a smartphone. So therefore you think everybody owes you something immediately, and you should never have any hardship. And you think everything's going to be easy for you. Well, welcome to the reality. Some days in the marketplace, it's impossible for you to make money. And that's a chapter that's going to be in my book. The days that you cannot make money in. Nobody else wants to write it. I'm going to do it. That's the secret. That's the thing that keeps people in this business long enough to let their even ridiculous ideas hopefully pan out. If they are good fund managers, if they are good money managers, flipping a quarter can be profitable. But how do they hurt themselves? How will you hurt yourself? You're going to push hard in this type of climate right here. You're going to push real, real hard. But it's going to finally move. Really? How do you know that? Because I don't. And somebody may think, well, because you don't know doesn't mean I don't know, or somebody else doesn't know. If they know how to trade this environment right here, and they're profitable, and he had not drawn down significantly, I will be their student. Go find them. They're not out there. They're getting chopped up. They're going to show you something after the fact. They're not going to be able to tell you this is going to act like this and behave like this. I really like that fair value gap on the dollar index I mentioned earlier. I see dollar going up there, and that sell side at 71, 75 point ES. I see both those things happening. That's my gun to my head idea going into the afternoon. Will it happen this morning before lunch begins at noon? I don't know. And because I don't know, I'm not interested. How's that for logic? How liberating is that? I don't know, so therefore I'm going to go take time away from charts and spend it with my wife. I'm going to go have lunch with my wife. How's that feel? It feels wonderful for me because I don't feel like I have to be chained to this charts like you do as a new trader, new student. You think, oh, he's going to leave and the big move's going to happen. There might be a big move after I leave. Guess what? I don't care because I know how to find the easy days. I know when to anticipate the easy days, and I know how to trade those easy days. You're going to see it. You've already seen lots of it already. But you can't learn properly, at least from me, without me taking you into these environments like this. And it sucks because you want to see big runs and entry called and targets hitting and just easy, fast runs. Well, I can't materialize that. If the market's going to be held in this, it's going to be held in this. You can't force it. I can't force it. And it's a hard wrestling match in the beginning because you feel like you just got to stay in front of the charts. No, you don't. I'm telling you, you got permission. Turn them off. There's far better days out there in your career. This one day, you're trying to make something happen in this. And I do so much discussions in my Twitter spaces and I go off the rails because I'm animated because I remember how frustrated it was for me. Trying to force something in this environment when it does things like this. Where none of my PDRAs are being respected. None of them. How do I know it's not a good day trade? Because none of my PDRAs are performing like I want them to. So how many does it take for me to lose faith in an idea? 3 of them. If 3 of them fail, I'm not interested. It's happening consistently all day today. So what makes you think that I should be thinking, oh, well, now it's really going to run? You see that? There's logic behind that. That's not ambiguous. It's very specific. It's a measurable thing that you can see when you look at your charts. Is it continuously giving you feedback that the order flow is bullish? Or is it bearish? If it's not giving you continuous, ongoing feedback that you are on side with your expectations, that means it's not performing like you want it to. Stay out. I promise you, if you just listen to me, you will not hurt yourself. You won't. You'll be able to stay in the game long enough when we have these easy days, and they are coming, folks. You just got to give it time. The market will not stay like this. It'll unravel. Boom, big moves will be coming. Fast market moves, large ranges that are sustained. That's coming. But if you beat yourself up in these conditions like this, you're going to be afraid to engage when it's like that. When you're supposed to be engaging, you'll be fearful because you beat yourself up like this. And your subconscious has retained all these bad experiences, and now you're afraid. Now you have scar tissue that doesn't have elasticity. You got to stay limber. Why am I doubting? Is there a word limber? I'm doubting if that even exists. If it isn't, I just coined it. There you go. You got to stay nimble and flexible. And you have to be willing to cut bait on days like this. Cut bait means you're done. You're not even going to pursue anything. You're not looking to. If you have a trade, you get out of it, regardless of where it is. You just let go of it. And then come back another day. Tomorrow it might be better. This afternoon it might be better. And that's how I treat this. When it's like this, that's okay. I have a divided day. So the AM session blows. No problem. I'm done. I'll come back at 15 minutes to 2, New York local time, and I'll study and look at the price. If it doesn't show me anything that I like by 2:30, I'm not spending the rest of the day and not even the last hour. That's the procedure I follow. How hard is that? It's pretty simple, isn't it? It helps me manage my day. It helps me manage my time. And if you're going to be a trader, it helps you manage your business. Another day. Tomorrow it might be better. This afternoon it might be better. And that's how I treat this. When it's like this, that's okay. I have a divided day. So the AM session blows. No problem. I'm done. I'll come back at 15 minutes to 2, New York local time, and I'll study and look at the price. If it doesn't show me anything that I like by 2:30, I'm not spending the rest of the day and not even the last hour. That's the procedure I follow. How hard is that? It's pretty simple, isn't it? It helps me manage my day. It helps me manage my time. And if you're going to be a trader, it helps you manage your business. You don't want to be, just because there's market hours open, you don't want to be sitting here plunking yourself down in front of the charts, because the longer you sit in front of them, the more convinced that you see these ink blots as a Rorschach that tells you to get in. And you regret it all the time. I promise you, if you've blown accounts before, it's been like this. You've done it to yourself in these environments. So, I know it's probably not a sexy live stream. It's probably not one of those feel-good moment days where, like, wow, man, this is freaking awesome. It's great. But this is the stuff I wanted to learn. I'm telling you, I would have paid money to sit with someone, explain these types of conditions and how to avoid them and when to anticipate them. But I couldn't see them coming. I just fell victim to them all the time. And when you lose money, and you lose money, and you lose money, and you're obsessively compulsive, one of two things are going to happen. You're going to check out permanently, and I didn't need to do that. Or you're going to dig your heels in and say, damn it, I will crack this shit, and I'm going to figure it out. And that's what my life was. That's how you're hearing me now. All the bad things made me who I am. All that rough stuff that beat me up, ground me down, I learned from that to become where I am right now. And everybody that makes money with the stuff that I've taught, they're benefactors to the things that I had to endure. And that's why I get pissed off when people try to teach it and don't give me credit, because you motherfuckers don't deserve it. Period. So hopefully tomorrow when we do our next live stream, I'll be with you again at 9:15, and we'll try to do the exercise again at between 10 o'clock and 11 o'clock, so that we can see, does in fact the silver bullet exist on a Friday? We have some news again tomorrow, so that might move around a little bit as well. But your homework assignment for today is to study and see if we move outside of this range. We got to get below, significantly below this low and below this fair value gap, or above the high of the new week opening gap. Okay, if we were to expand above the new week opening gap, I'm looking for 4104. Okay, so 4104. If we get above the new week opening gap, it doesn't mean just trading above it and therefore it's going there. It needs to trade above it, treat it as support, and then run higher. If it does that, I would expect 4104 as a draw on liquidity for the PM session. If we break below the fair value gap here, then I think that we're going to gravitate down to the sell side over here, not just here. That's my expectation. And if I don't see things that would support that idea before 2:30 New York local time, I'm not doing anything in the last hour trading. So that's what I'm doing. That's what I'm expecting. That's how I see it. Gun to my head. Now you know what I'm thinking. I'm not touching it right here. Okay? So hopefully you got something out of this. Hopefully it inspired you to trust yourself and give yourself a little bit more time, knowing that these days can be predicted and not fall victim to them. You saw the silver bullet idea pan out. It was better than 5 handles, and it didn't have to be correct about where I thought it was going to go to the sell side. Sell side, as I've taught many times before, they are points of reference where the market can gravitate to. It's not, it has to go there. It can go there later on in the day. That's when you're right. Okay? But you don't need to be right in your trade. You need to be profitable. And you need to be able to get out when it gives you 5 handles. It's easy, folks, but everybody else is trying to say it's complicated. It's not complicated. It's very simple rule-based ideas. But you have to be diligent. You have to have the rules written down, understood, known, and stick to them. Then, if you stick to them, it isn't hard. It isn't complicated. But when you deviate outside of them and go against what I'm suggesting as a bias, then obviously it is hard. Then it is complicated. But I'm not complicated when you go against what I'm suggesting the market's likely to do. So until I talk to you tomorrow, enjoy the rest of your day. And be safe.
Dang, and 3.5 hour one. Okay. Are we gonna complete this market maker buy model today? I honestly don't. We could. I'd probably look for this high today. Just it's like a little soft bias already. I think this high is likely. Dang, another classic buy day probably. These lows, unless we have SMT here, right above a new day opening gap. These lows look. Okay, so we actually do have SMT, so dang, nice London session. Not nice. It's alright. Alright, I'm gonna take a shower again. I'll come back, do these notes, have some breakfast. And then we'll get into tape reading today. I think today might be a good session. So yeah, that's that.
You start to judge yourself off other people. Everything starts to corrupt your mind. You start to look around too much at other people and what they're doing, and that starts to corrupt your own dialogue. We are judging ourselves against too many fucking people. You have to judge yourself against yourself. And that's the one thing I started learning, man. This isn't a race against me and Rich Roll. This is a race against David Goggins and David Goggins alone. And once you can silence all that bullshit, all the outside interference and things that are attracting your mind to everything, you can then start to grow and realizing I'm stressed out for no reason. This is my own little race. This is my own timeline, and this is how I'm gonna run it. There was no growth until I cut myself down to nothing, to the person I really was, the real human being. And once I found out who I really was, that's when I started growing. I was trying to build on top of a lied, fucked up foundation. You can't build a house on a fucked up foundation. So I had to get down to the actual mineral soil of who I was, and that's when you can start real growth. If you're willing to suffer and go back in the grind, that internal dialogue you have with yourself when you're in misery and you're uncomfortable, it's a real, scary, unfiltered, no lying dialogue between you and yourself. And people know exactly what the fuck I'm talking about when you're in a bad spot in life and your mind is saying all kind of shit. That's who you really are. That's the real you. That you
where do you think that next candle, when we start trading on Sunday evening and the markets open up, is the market going to expand, not close high or low? Is it going to expand? Is the largest portion of expansion in that weekly candle? And what do I mean by that? If you were to measure the highest high and the lowest low after the week closes, okay, was there more expansion upward or downward? That's the question that I teach my students to aim for answering on the weekend. You're looking for that, okay? That gives you the absolute strongest bias filter you'll ever fucking find, okay? Because what you're doing is you're patterning it off of large institutional flows. Ooh, what does that mean? Well, large institutional flows are big funds, big hedge funds, big deep pocket entities, okay? And they are not trading on 1 minute charts. Okay, they can't put their size into the marketplace on a 1 minute candle. So they require weekly and daily levels. And that order flow that comes through that time frame, that's the elephant. That's the trail of elephant footprints that we're looking for. And smart money is a big elephant. It's lumbering. Okay, it has to take a long time to work in its orders to get into a position. Not the start of a position, obviously, any position entry that constitutes their participation, obviously, right? But they can't put all of the size that they want on just in one trade. Like you go in and put in your 10 lots or your 5 lots or whatever, and it's done in one clip. Boom, it's done. They don't even break the order up. But large entities and large hedge funds, they have to break their orders up and they scale them in. So they're requiring a longer term price swing. And we derive that from the weekly chart.
All right. Around that current new day opening gap. Was the silver bullet there yesterday? Oh yeah, it was. Ten. It's right there. There's one right there. There's one right here. I'm gonna do the notes. Alright, was this on March 30th? Yeah. Okay, I actually have some decent notes here. Two pages. 2 pages. Last page. Hey, notes done. Okay, the goal today is to outline one outline one 2022 model. That's it. That's the goal. That's that's the goal for the rest of the week. Is every day just outline one 2022 model, live, not after the fact, live, and that's what I want to do. So with this high right here above this new day opening gap, we've now created interest, in my opinion, which I think this can make this a favorable draw. This right here, this little displacement leg we just had into this order block in my opinion, we've now displaced above 50%. We have this order block. We have this imbalance right here. And we just dropped below true day. So I think that could get a run to buy side here, but overall we are within a little sell model here. So I kind of want to see where we're open around 9:30. But this looks like it could be a sell program to take out this low, maybe this low, and then maybe return into this new week opening gap. But overall, if this 1 hour order block, I'll be monitoring this. If this fails, we're likely going to draw into these levels. If this supports price, we're likely to go into draw into this high. Because ES has already taken this high. That's something to note. ES has already taken that high. But I would use a more six sister approach because we have this nice 1 hour order block to where I don't think this will be a reverse of order flow. Yeah, I just think it's less likely. I don't know what's up with this.
So when he wasn't getting it correct, I said, okay, buy here. And as soon as it gets above that level right there, I want you to close it. Do not use a limit order. I want you to feel it. I want you to feel it while you're in it. And as soon as I tell you go, you buy it. And when it gets to that level, you sell it. Sometimes he would sell it before he got to the level. I said, why'd you do that? Because I was afraid, why did you not listen to me? You're not listening. 30 years of experience against yours. If you're not going to listen, you're not going to learn. And other times, he'd hold past the level. And it would pull back on a little bit. I said, okay, see what you did there? You had the right amount of gain, but you held on too long. Why'd you do that? Because I thought it was going to keep going. I didn't tell you to do that. And he'd get frustrated and start getting antsy. I said, what are you feeling right now? I'm done. I'm done, Dad. I'm done. I said, no, you're not. This is exactly where you need to be at. This is where you will do what you did by failing at this multiple combines. That frustration, that feeling of, I need to do something to replace this feeling. That's where it all comes from. Everybody that ever blows an account is in that state of mind. And if they don't start there, when they're in trade, they know damn well it's going tits up and ain't going to pay out. They know they should get out and they don't. And then they're in that moment. They're in that mindset then. But they can't bring themselves to get out of the trade, close it. And I put him in those today. Lots of executions. Lots of them. And we hung around break even. And I told him, I said, what's it feel like? He goes, well, we were up a lot, we were down a lot. And I said, what's a lot? $200 here, $200 there. I said, see, you're saying a lot because that's in relationship to what you earn on a weekly payroll. But the most you lost then was down was like $500. And you only went down there one time. But every time you went up, you come back down a little bit. And every time you go back up, you get a new equity high. And you come right back down the middle, hang around, break even, go back down, break even, go up a little bit more. And then I said, now think about what you're doing. All these transactions, do you want your trading to be this many trades? Because there's a lot of people out on social media that will show you at the end of the day, this is what I made. Look what I was able to profit today. But they don't show you the 50 transactions they took. There's nothing wrong with working your ass off to get out of something. If you're really gung-ho about trying to make a profit on the day, sometimes you're going to get into a market environment where you have to work a lot to get it to come out. Or if you go into drawing, you do it wrong. You're human, you do it incorrectly, and you go into a losing trade. And then you try to get it back into another losing trade. You have to stop. Or know that you can come out of it. And that's why I tell them 1.5% is your maximum. Because that 1.5%, you should now know you've made $544 today. Think about that now. If you can make that, that means you can risk that. You got to be able to go out there and find, like algorithm and high frequency trading developers, they go out there and they look for a trade. It may be $100, it may not be $250. But what they're doing is they're looking for something that they specialize in, that algorithm will go in and monetize a fluctuation based on this repeating phenomenon that happens all day long. And that same little tiny little piece, one little bite of price action throughout the day, done hundreds of times, thousands of transactions a day. They're pulling out money that you can't even fathom because they're taking something with a cookie cutter approach, something that they can repeat over and over and over again. Every single one of the PD arrays I've taught you are just like that. That's what high frequency trading algorithms that people have learned from me, they have used these things now. They can go out and find them any time frame. That's why I went down into the sub 1 minute charts to tell you that this stuff is in there all day long. All day long. Oh, it's just a shitty market. It's not moving around. It's in chop. We're in the real chop. The chop's real, man. The chop's real. No. Slicing and dicing on a sub 1 minute chart. There's still breakers in all that chop. There's still institutional overflows in all that chop on a sub 1 minute chart. You have to know where it's going to go. Even in a small little choppy range, if you want to call it that, you can anticipate what pool of liquidity is going to go in that 1 hour. I can trade in an individual 60-minute range and beat everybody's asses on social media. And I said that, yes. That's not arrogance, that's just the facts. Because I understand what price is going to do. I understand how I can mess it up, and I can wait for those perfect instances where everything makes perfect sense to engage right then and there. And I know the times that hurt me. I know when it could look like there's an opportunity and it's really not there. Experience is going to dictate that. And I taught him today that there's going to be a lot of lessons that you're going to learn that are not going to be in my video. They're not going to be in our discussions. It's going to be what you have discovered about yourself. And you're going to find that you're going to excel in certain instances. Something just really revs you up. You see this opportunity. It makes so much sense to you, and you're not demanding it pays more than it would any other time. It's just a profitable opportunity. And you may not have the equity to do 100 contracts at a time when you start doing it. Start with one, and you build up. And when you make enough equity to be able to do two comfortably and not go over 1.5% risk, then only then do you do it. But every single trade that you make and put on, it's never to be taken where you can't at least get that same trade paid out to you at least 2 or 3 times in the same day. And I'll say that again in layman's terms for the folks that don't understand or appreciate what I said. 1.5% of your equity. If you can't find a trade 2 or 3 times intraday with that yield on an individual basis 2 or 3 times, you have no business taking that risk on. Think about it. Because what you're doing is you're demanding that you find a needle in a haystack. In your limited understanding of the marketplace and your limited experience doing it in the most difficult market conditions I have ever been in, you're going to be the person that can just go out there and walk out there and do that. I'm sorry, but you won't. You won't be. So don't put yourself through it and discourage yourself through failure. Make allowances for yourself. Spend a little bit more time learning how to do it. Do it the right way. So that way you enjoy the process. It should not be a draining effort for you to want to do this. And some of you, the way you talk in your tweets, it just seems like somebody's twisting your arm, and it ain't me. If you're not having fun doing this, it's not for you. You're grossly doing it incorrectly. Making money is the end result of you doing things, learning how to do it, and having fun having done it, but not being on an emotional high that you have to have a win all the time, or that you're chasing it like a high. And the only way you feel that or understand and appreciate it is when you lose real money. The people that lose real money know exactly what I said, and it resonates with them. But if you've only been in demo, you haven't even came to the dance yet. Quote market conditions I have ever been in. You're going to be the person that can just go out there and walk out there and do that. I'm sorry, but you won't. You won't be. So don't put yourself through it and discourage yourself through failure. Make allowances for yourself. Spend a little bit more time learning how to do it. Do it the right way. So that way you enjoy the process. It should not be a draining effort. For you to want to do this. And some of you, the way you talk in your tweets, it just seems like somebody's twisting your arm, and it ain't me. If you're not having fun doing this, it's not for you, or you're grossly doing it incorrectly. Making money is the end result of you doing things, learning how to do it, and having fun having done it, but not being on an emotional high that you have to have a win all the time, or that you're chasing it like a high. And the only way you feel that or understand and appreciate it is when you lose real money. The people that lose real money know exactly what I just said, and it resonates with them. But if you've only been in demo, you haven't even came to the dance yet. You're a spectator, not a speculator. And as soon as you put risk on the line, it all changes. So you have to have some measure of experience that you didn't just get last week watching a 5-minute trainer, the cliff notes of something that took 30 years to be placed in your hands now. There's a lot of things that you're going to learn about yourself, and you're going to laugh when you look back at how you thought you were ready to trade when you were not. You were not. I know I wasn't. There's no shame in admitting it. There's no shame in it. But right now, you would never do that because it sounds like you're not smart enough. That would be like admitting weakness, and that's exactly what my son's struggling with right now. See, he's at the peak of his testosterone. He's at the height of his strength, his muscularity. He's in his mind at his present age. He's at the peak. And young men, you know what it was like when you were a teenager. You thought you could jump over buildings and nobody could kick your ass. You were the best looking person in the world. Everyone wants to be with you. Unrealistic viewpoints of yourself. And see, he did damage to himself. He did damage. And he bragged to his friends. He bragged to his girlfriend that he was going to do this and he was going to do that. And he couldn't do it. Now he has that. He's wrestling with that. And now because he didn't do it successfully, like he walked out and thought he was going to be able to do it, he's doubting. And doubt in a hurt, bruised pride in a man, that's dangerous. It'll make you do stupid shit. It'll make you do dumb stuff. So most of today, it was me just cleaning those wounds, reminding him that that's normal. Dad went through that. I did all that stuff. I did all that stuff and worse. And there was nobody here telling me this is how you fix it. So I was trying to find my way through it all and making it longer than it has to be. And it's painful. So when I talk to you and I make these conversations available to you, it's for your edification. It's so that you don't go through it like I did. So that way you can avoid it and appreciate it. You know what? I don't want to make those mistakes. I'm glad ICT went through it. I'm sorry he went through it, but I'm glad he went through it and he's telling me how I don't have to go through that. That's the wisdom in a student that's listening to me. Not this guy talks and he likes to hear himself talk. No, I don't give a fuck if that's how you think. Get the fuck out of here. You're not somebody that wants to learn. You're a clown. You will be broke. You will be working the rest of your fucking life. You will not be able to be profitable as a trader. So just get the fucking stepping. The people that really want to be here and make themselves a profitable student that trades and earns their own money, they want to know how they're possibly going to mess it up. And I'm not going to talk to you always in a refined manner. I'm live. I don't have a filter right now. So I'm going to feel the impulses and the emotional charge that I remember going through. It's all real stuff for me. I went through this stuff and it was painful. And it's painful to remember what it was like for me. And I know that some of you are going through it right now. And it's normal. And you can get through it. You can grow out of it. Use it like rocket fuel. It'll be the deterrent to never doing those same things again because you know what it's done to you. You don't want to relive that. You have now a reason to appreciate the rattlesnake that those circumstances provide. You know, walking into that situation again, it's like a rattlesnake's tail just shaking. You don't need to go back in there again. You know what it's like. So avoid it. Don't try to push and make money in those situations. Just relax. Take the day off. Take the session off. Don't do it. But ICT, I'm supposed to be an everyday trader. Who the hell said that? It wasn't me. So having a very, very low expectation of yourself. Yes, 5 handles is a wonderful target. Realistic target. In the beginning, if you're absolutely scared to death, if you're scared to death of taking trades and you don't want to get into a trade because you're just afraid to do it, feel what it's like to desensitize yourself to go in and execute and put a limit order on one handle. Put a trade on. If it runs up one handle, it will close the trade out, and that's one handle. That's $50. It's not a lot of money. And if you do this over and over and over again with a demo account, you will get over the fear of entering. Then you add one more handle to it. Put on an entry, reach for 2. And you'll see even with static price action, if you know where the market's likely to go, doesn't mean you're right. This means that this is the next draw on liquidity. This is where the obvious equal highs are. This is where they haven't been all day. Let's aim in that direction. And then put a trade on and try to go for one handle. And do that all day long, working with a 1-minute chart. It's not about how much drawdown you have. Don't worry about that. Because if you're trying to measure that, you need to get into the pushing of the button and just looking for a small transaction. That's it. Over time, by gradually working into one more handle, up to 5, you'll completely desensitize yourself to the outcome. It won't matter to you because you've done it so many times, you're bored by it. You don't care. But think about what you're doing with your demo account right now. Think about what you're doing with your compounding challenges. You're gambling. You're literally gambling. The whole time you're doing it, you're scared. You're anxious. You're hoping and praying you can get that certificate that says you're funded because you can't wait to go on social media and show it. But you're never going to show anything after that. Because chances are you probably will blow it when you get to the funded level. Nobody will see your payouts, certificates or confirmations, but you did something. You showed the world that you got funded. You passed the combine. I don't want any of my students thinking that's a success story. That's not. That's just, okay, you showed up to the dance, now dance. All these certificates, they're wonderful little hurdles for you to get across in the beginning. I'm not trying to minimize that. If you've never done it, wonderful, that's where you're going to go. But you have to have some kind of vision beyond that. What are you going to do once you are funded? Because chances are you're not really responsible. You're not organized. Unless you're thinking like I'm trying to suggest to you in my teachings and lectures and here tonight. You have to have some measure of controlling yourself and thinking about things correctly. Don't just go in and impulsively try to execute. My son, my own DNA, flesh and blood, There was no magic because he came from the fruit of my loins. Okay, there was no mystical, magical powers transferred to him. He did like anybody else would. Do the wrong shit. Well, here's your results. Impulsively tried to do something he wasn't ready to do, and now he has the mental baggage from it that I told him, and I tell all of you how you can avoid all that. So now he has to wrestle through all of that pride, that bruised ego, and concerned about what if he doesn't really still learn how to do it. You have no idea the impact that has on a person, especially a male. We are performance oriented, from sexuality to physical appearance to workplace, sports. We are all about measuring. It's all it is. It's measuring. And ladies don't think that way, and that's why they're better traders. So if you cause the damage in your psyche early on, you will carry that the rest of your career. You might become better at coping with it, but it never goes away. It'll always be that little limp, that little crick in your back, that little bum knee sensation you get when it rains. It'll always be there. When you do certain trades, it'll jog your memory of it. And then while you're in a trade, you'll be thinking about, man, that was a dumb trade. Is this going to be like one of those again? Are you focusing on that trade? Or are you worrying about and reliving and having a flashback moment and having a PTSD episode? As soon as you lose sight of your trade, in the beginning, not 30 years later, but in the beginning, as soon as you lose focus and you start having your attention somewhere else, close the trade. You've lost the plot. Oh, this guy just said close. You need to reward yourself for being disciplined. Discipline is not taught. You can't buy it in a course. You can't read it in a book and acquire it. You can't have a 5-minute trainer or Cliff Notes edition of anything, my stuff or anyone else's, and get discipline. It's forged through pain, struggle, and finding the outcome that is favorable that you couldn't identify or see at the time. And you can't buy it in a course. You can't read it in a book and acquire it. You can't have a 5-minute trainer or Cliff Notes edition of anything, my stuff or anyone else's, and get discipline. It's forged through pain, struggle, and finding the outcome that is favorable that you couldn't identify or see at the time. And because over time you do these types of things, and you know what it was like to be going through it painfully, doing things that you shouldn't do, taking on more risk, taking on more contracts, because I know what you're thinking. It's the same thing that I've talked about, and my son lived it. They will tell you that you can trade up to 15 contracts if you use a $150,000 account. Sure, sure you can do that. And you're thinking, well, it's worth the risk. It's like a lottery scratch off. It only cost whatever it was. I don't even know what they cost to get the combine started. But what happens if it works, man? It's like a big shortcut, because if I can get the funded, something magical is going to happen. I'll learn how to trade then. It sounds funny, and probably some of you are laughing at you. That's exactly what you were thinking too. As long as I got to the funded part, then I'll know what I'm going to do. I'll pick the right trades then. I'm in a hurry. I just want to get through that first stage. And these funded companies are loving that. They're making lots of money with reset fees. You can do this, but you have to change how you think. You have to lower your expectations, and that's not a bad thing. Trade with one contract. Trade with one contract. And I promise you, this is what you're going to have happen. You're going to use one contract. You're still going to trade impulsively. You're still going to get in there because you want to have something good happen. And then you're going to go into drawdown. And that one contract, you'll have 3 handles, becomes 7 handles drawdown. Stop. You can afford to trade more because the max loss day, whatever it may be, you're not there yet. Still, stop. Can you stop? 99% of you won't. That's a problem. That is a problem. Because if you can't control yourself and say, you know what? I can stop right now and I'll come back tomorrow. Even if this does move where I thought I was going to go today, or if it moves even way beyond that, it doesn't matter because you weren't in that trade, so you can't regret it. You weren't in that trade, so you can't regret it. You have to start somewhere, forging discipline, being self-responsible, and that way you know that you can control yourself in the future and you can trust yourself. Because what you're doing, and you don't realize it, you're pushing the button in these instances with a demo account or in a combine because you know that you wouldn't be losing that money. If it's wrong, that money's not coming out of your bank account. It's not coming out of your live equity. So it gives you this false sense of security. And it's also, it feels like you have all upside, no downside, but you still have to pay for a reset. And you're paying in time. You're wasting time instead of just doing it the right way. Every one of these combines, every single one of them, all of you could do it in a month. All of you could do it in a month. But all of you want to do it in the minimum time. All of you want to do it in some guy's challenge on YouTube. Do it in this amount of time. How about make $5 million after taxes? Let's talk real money. Okay, stop with the Mickey Mouse shit. All these challenges, do this and do that. No, 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 no. I'm teaching you how to be the best trader that you can be. And if you want to listen to other people tell you shit, you're welcome to do that. But that combine, whatever company you're using, every single one of them are Mickey Mouse level easy. They collectively understand that you are going to do what I've been talking about in this entire Twitter space tonight. You're going to be reckless. You're going to be impatient. You want to just get through that first step, that unprofitable, unfunded challenge, that contest. Who are you competing against? You. You are. You are competing with yourself. And when you blow it, who do you lose to? You. So it doesn't make sense to figure out what the fuck you're doing wrong. And that's why I talk like this. That's why I talk about the things outside of the concept in a video. You think I'm talking about dumb shit. I saw a guy on one of the dudes that take my Twitter spaces, and it'll be in YouTube. He does it. In the comment section for some goober. If you want to make money, or if you want to have more people watch your videos, you can cut the bullshit out and just get to the trading parts. Dude, you're listening to this. You are absolutely fucking doomed. You're never going to make any money. The fact that you don't want to listen to someone that has gone through it, figured out how to fix it, and has taught other people how to do it, and they're making fortunes because they have adjusted and did these things in their own trading. There is no shortcut. There's no way around these things. Whether you are met with it right now or in the future, every single one of you, you will come across this bridge in the road, and either you stop trading.
This low-key good Twitter space. I'm not kind of hooked in on it. All right, gonna look at the charts. So it looks like okay. So we have a little bit till market opens, about 20 minutes. Okay, let's look at. I want to look at dollar first. Dollar left this. Sunday. I guess we do have SMT there. We're now drawn into IRL here. You have this old high, you have constant encroachment of that wick. I low-key think that this could be a smart money reversal. But we are within this dealing range here. Very early prediction. And I don't really trade Forex like that. Euro looks a lot better in my opinion. Ooh, CL. Dude, there's something about CL that's just been like... Okay, let's look at dollar still. We like barely looked at it. So, if we look at dollar, we haven't really had manipulation below true day. Look at the hourly chart. Premium array. Premium array. Premium array. Then we have these highs here within that imbalance. We have this volume imbalance that we respected. In overall, order flow is bullish. In terms of sell side draws, I wouldn't really expect much. So I'm expecting buy side to get delivered here on dollar. But we could have some form of manipulation lower at market open. Plus, okay. So overall bullish stance on dollar, which mean give it a little bearish lift, bearish stance on NQ and ES. So look at NQ and ES. ES has just taken buy side liquidity here. So here we have an SMT, and on dollar on ES we actually have a 5-minute 2022 model playing out right now. Look at ES, which I actually anticipate to play out. So a 5-minute 2022 models looking like it might play out here. We don't have any red folder news today. I want to be patient, for sure. I definitely want to be patient. Overall, 15-minute order flow. I would say it's shifted bearish. We've had SMT here, confirm a smart money reversal. We do have a lot of wicks here. In terms of discount arrays, though, we do have this low here. We have this low here. I want to see if consequent encroachment of this 1-hour wick fails. I think that'll give us insight. Yeah, but one 2022 model is really what I'm is the goal for today. Seeing one 2022 model pan out, real time, not in hindsight, and having conviction within it. So if you look at here, we've taken short-term buy side, we've taken short-term buy side, and then we have an SMT here. And we're still holding this 1-hour imbalance here, which is also a new week opening gap, I believe, on NQ. So we came back in and we referred to this imbalance again. Look at the wicks, or look at the bodies. The bodies are telling the narrative that we're respecting this 1-hour imbalance. But we do have these equal highs here nestled within that daily imbalance. Look at ES. ES on the daily chart is actually drawn into that daily imbalance, that daily SIBI. So on ES, we possibly could have an IOFED. In terms of that, we don't on sort of daily levels. The only other level I know on ES is consequent encroachment of that fair value gap, that SIBI, which we've almost tapped into. So yes. ES is just taking buy side and then taking buy side again within an imbalance and a new week opening gap as well. So we're respecting an old new week opening gap. We have a current new week opening gap below. ES looks a little bit more bearish here. We have a 15-minute imbalance, a SIBI, that we just respected. And it's looking like this. I would expect to see expansion lower here near market open. I think that's more favorable draw. I want to see how that opening range, how we trade within that opening range today. Let's look at YM real quick. Okay, YM looks like it's consolidating. So this is a balanced price range here. All this is balanced. So we have an inefficiency here, which I think this is the draw on liquidity for YM. Like I definitely think that this is more likely to get traded to 100% than this to get traded to. And then if this does get traded to, I don't know what to say. I think the odds are likely to draw into this more than this balanced price range. In terms of hourly, we do have this hourly sell side imbalance right there. YM just consolidated yesterday. Okay, I'm really watching constant encroachment of this wick. If we look at the hourly chart, we have an hourly wick here. Then we have an hourly wick here. This wick dropped into this order block with that fair value gap. So for me, I kind of have a loose bias. I'm not gonna lie, I kind of have a loose bias. I could see this going either way. So therefore, I'm gonna wait for more insight. We have this order block, this down close candle here with this imbalance, high probability order block that we stung into, and we created this wick here. So that shows some form of sponsorship. But we have this SMT, but I don't want to derive my bias just from an SMT. An SMT isn't going to move the market. But we also have this hourly imbalance right there. I think this high, I need to start using this again. Like, just by looking at this though, it does look like we want this high. We've already engaged a 20 candle, 40 candle look back. We're holding that order block there on the 1 hour. Holding this previous down close candle, and now we're creating this previous down candle with displacement. And look at that wick. That wick is more what I'm looking at. I like to see wicks. Wicks show sponsorship. And we're holding this area that has many new day opening gaps there. So if you look at this, we've had a change of state delivery. Soft bias so far. Soft bias. Okay, per usual now, I want to have the 5 and 15 minute charts up, and then once I have a a decent bias from that, and then I can go into the 1 minute chart. I don't want to go into the 1 minute chart without a bias. I'll occasionally pop into it to see, get more information on what likely could occur, but I don't want to. I don't want to spam the. Just by looking at this 15-minute chart, this does look pretty. This does look like we can have expansion higher. We're starting to disrespect this imbalance here. This would likely become an inversion. The fact that we've had a change state delivery, it looks like we're respecting that. We dropped below true day open as well. This could be another classic buy day, but I have a soft bias here. On ES, it doesn't look as clean. We do have SMT right here at these lows. If you look at the 15-minute chart on ES, we're trading within two 15-minute imbalances after just taking a pool of buy-side liquidity. So I don't like to always be like, oh, I don't like anything, but time will tell. There's always going to be some more opportunity. The thing that I don't want to do is just rush it, feeling like I have to rush it early in the morning when nothing's there. And if there's nothing there in the morning, then there's going to be a PM session. If there's nothing there in the PM session, then there's going to be the next day. And if there's nothing there in the next day, if there's nothing there in the next day, then there's always the next day. And if there's nothing there in the next day, then there's always going to be more opportunity, more trades to find. And like, if I personally don't like it, then I'm not going to put my own money at risk, my own conviction at risk. And if someone else is able to find something out of that, then that's cool. Then I don't care, because trading's personal, and social media is definitely does not make trading personal at all. Look at this new week opening gap. Notice how we're respecting that off that 5-minute order block right there. If we're looking at this in terms of probabilities, I think it's likely that we'll see expansion. I kind of like these. Sometimes, most of the times, this new week opening gap indicator though is pretty messy. That's why I don't love it. I feel like there's a lot, which is why I would totally agree, and I think I might do this in the future, is just have like a separate template. Well, I might just turn it off here on this one and have it on the 15-minute chart. Same with these kill zone prices. Yeah, I think that looks better. Look at this wick here on the hourly. That order block and fair value gap here. This, I think it's likely that we see expansion into these equal highs as well. I'm willing to give up the opening range. The goal today is to find one 2022 model. Happen live. That's the goal. Look at this 15-minute wick. We got a pin bar wick. Pin bar. Notice how that like wick is that 5-minute order block. Pretty much. We're opening right around that new day opening gap on ES. The current one. So let's see what the Judas swing does. So it's 9:10 or 4:10 that it stops. Or is it 4:14? It's 4:14. So we're opening up. We're opening up right where we closed, pretty much. So we don't really have much of an opening range gap. How about on ES? Yeah, ES is trading opening right around that too. I want to look at other. Pew, 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 pew. Pretty mixed bias, soft bias. ES opened right within that new week opening gap. New day opening gap. We're opening up with a little bit of a discount here. Same with ES. So originally pushing up into that opening range gap on ES. All right. Notice how we're not holding. I would want to see this order block get bought again if we fail to displace here, which is I think more likely. I think we'll likely see this low, and then maybe even these lows here. We have this 1 hour BISI right here. Constant encroachment that wick is failing to support price. Well, I mean, it still could, but if we're just looking at like where this candle traded, I would like to see like constant encroachment perfectly respected, and that's not happening here. Back into that hourly order block though, so but I also doubt that will get bought again. It's likely just due to swing lower. Let's study to see if this imbalance here paired with this mitigation we do have SMT at these highs too. SMT here. Okay, let's study this for value gap right here. See if this offers displacement into here, or if we want to meander here. I feel like this fair value gap could give us insight here. Notice how that's not getting respected. ES has a higher inefficiency. Notice how this isn't getting respected at all. I want to see this candle close though. But it's not getting respected. That's okay. Dollars just reached its buy side liquidity pool. So we could see some form of retracement after that, which could lead to higher prices. Yeah, I think this could be an inversion here. Balanced price range right there. Look at that 5-minute order block there. I'm looking at this breaker now. Sell side taken. Gonna be chill here though. Because this is 9:30, I would rather wait for 10. 9:50 macro. I'd prefer for this to stay open if we do want to seek buy side. Because this is balanced. We have fair value gap in and a fair value gap out. So I wouldn't want to see this get filled. See constant encroachment of that wick. We're within that breaker too. We have that hourly order block right there that we dug into, as well as that 5-minute order block that we dug into as well. We saw SMT here at the highs that got inversed with this imbalance. This wasn't getting respected. Now cost per coach from this wick is failing here. All right, I want to wait. This doesn't look like it's anything yet. Nothing to look to really trade here. I don't think ES will really reverse here. It could. Oh, I don't have the magnet on. Look at the delivery. Okay, we failed to create an imbalance there. Immediate rebalance to that order block. If you look at the 15-minute, looks like we've had manipulation. So I'd expect to see more distribution here. More likely than full on reversal. What's more likely to occur here? I would think a buy side liquidity run. For sure. So why try to fade it? There might have been a lower time frame inefficiency here within these wicks. Like 15-second, but that's cool. It's gonna be more opportunity today. For sure. I mean, it's still opportunity. Okay, buy side just got taken. Short term buy side. Looking for this high to possibly get taken as well. We have a new day opening gap here. Look at the delivery. Just outside of that. Alright, let's look at ES. ES, I would expect to see a buy side liquidity run too. ES is actually within a new week opening gap here. Sell side taken, market structure shift. And we left this as a breakaway. There wasn't really an entry, so Nothing to care about, you know. No entry. Cool, cool, cool. No entry. That's cool. Hey, but we had an implied fair value gap. I don't know. I don't want to say that because I haven't done much study with implied fair value gaps. Look at this imbalance right there. Oh, I was late to that. Possible IOFED. Buy side did just get taken, so. But we can use possible six sister approach to imply that ES is going to trade up to buy side too. So we could see further displacement here. One hour manipulation in the order block fair value gap. We'll likely see this expand to buy side here. And this in the future looks like it'll be a good propulsion block. You have an engagement of a higher time PDRA, you have a big wick on that candle, and you have a nice body with no with a smaller upper wick. That's what I like to see. You'll see that order block right there. Order block. Uh, ES at the time is also traded almost to constant encroachment of a new weak opening gap. So we trade above a new weak opening gap and then almost to constant encroachment of that level too. So this order block could be a good buy. We'll see. Dollar just took buy side, so okay, that's that 1 hour propulsion block here. Look at the bodies here on the 1 minute. With that imbalance right there. And we have SMT at those lows. So like it's a pretty small SMT, but so let's see if we get expansion here. I want to get less reactive with my analysis. Like I would say, like as a trader. Well, I mean, I'm just tape reading, so it's not like a bad thing, but I do get a little bit reactive. Like, oh, we're reacting off this level now, but instead of reacting, I need to be more predictive, or I would like to be more predictive. But that's always something to work on. Okay, let's see if we get expansion here to buy side. ES has now just taken buy side. We're now drawing into constant encroachment of that daily imbalance on ES. Look at the snapback at that imbalance. Snatchback at that imbalance. $9.50 macro has opened up. Don't forget about that. Have taken minor buy side. ES, if you look at the bodies on the 1 minute, constant encroachment at daily imbalance. Pretty on that point. Buy side taken, market structure shift. Something to study. We've taken. I don't have the ES chart up, but we've taken buy side and then we've taken buy side again. Have a market structure shift here on the 1 minute, so I don't trust it. Definitely not. I don't think the bias and framework's there. So we got like a fake 2022 model, in my opinion, on ES right now. Came back down to that 50% DRT level here. Stop hunt. Overall, I don't have a good read with what we want to do next. Because we do have SMT here. We have a larger pool buy side though. ES is delivering to the low end of a new week opening gap. I would suggest that we're still in the SPY program, 100%, until proven otherwise. Just some 950 macro power 3. We're reclaiming that breaker too. Ooh, yeah, ES delivering right to that new week opening gap. Okay, I would actually feel comfortable with this inversion here. Sell side taken, market structure shift. This is the 2022 model that I want to stick to. But we have an inversion, so I want to see if we can form a fair value gap here. We have like a little fractal SMT here. Sell side taken, shift to market structure. I think this will get left, but we'll see. ES is trading within a volume imbalance at the same time. So since ES is respecting a volume imbalance, I like that. That constant encroachment of that SIBI though on the daily chart on ES, we're respecting again. Right, we disrespected that inversion and that imbalance. And it seems as though ES is respecting that constant encroachment of that daily SIBI. Now we've had displacement at 10 a.m. on NQ. It does not seem like we want to hit the buy side. Or we're either in consolidation here, which means 1050 macro might be a little bit better. I would say I like that. I like that. I like trying to outline. I'm gonna do that. I'm gonna do that every day. Try to outline one trade, and that's it. One trade, and then that's all. That's all. I think this was just impatience. Well, not impatience, but I know I have nothing to lose, so therefore I'll outline. I would rather. I know that I'm able to make. I know that I'm able to not have this pan out, and still be fine. Which is it's good and a bad thing, cause like normally if I were to be trading live, I would probably look for something better, which is kind of. I mean, it's all right. We inversed this gap here. We have S&T. We've taken. I just feel like it wasn't as textbook. But at the time, ES is supporting this new week opening gap. I mean, we still are supporting that. ES is simply just retracing back down into imbalance with the new week opening gap. I'm gonna grab something to eat real quick. I'll be right back. All right, now I think buy side is more favorable. Should be. Let's see. We've now broken out of constant encroachment of that civvy on ES. Where did we drop down into? At 5-minute order block again. Sorry, not the 5-minute order block, but we have a 5-minute propulsion. This was the 5-minute order block from this morning. Overall price action today, or I honestly think it's the 1-minute chart. It's just the 1-minute chart. I mean, the 5-minute chart, this looks decent. The 1-minute chart, no. Okay, if we look at dollar, I mean, I guess dollar took that at 9.35. Notice how we're failing to reach that buy side objective on NQ. We're failing, we're failing, we're failing. Overall, this just looks like another consolidation. I'd rather wait for the 1050 macro. What's this volume imbalance here? Okay. So this entry here was in too deep of a premium from this price like high to low. This is a balanced price range. It's going to take more than one pass to get through that. Okay, so buy side got delivered. If we're looking at this now, it does look kind of clear in hindsight, but overall, kind of was a little difficult of a read there, and I don't think the entry that I put on was a bad one at all. It's something to learn from, and that's all it is, just learning experience. And I definitely think that me putting on like possible entries instead of just reading the price does make it so I force myself to try to place a trade with my mind, and it makes it to where I have something to glean from, you know. Whereas if I just read the tape, like yeah, there's things that I can glean from that, but I think that I'll glean more from like actually taking a trade. And if we look at this, I feel like the main struggle in me is not so much my bias. My bias can be good. It's where I choose to take an entry, and I think a strict hardline rule that I need to have is only entries in discount of a range. Here we have this doing range high to this doing range low. Then we have this doing range high to this doing range low. I mean, I guess I did enter in a discount, technically. So. Okay. Now we have buy side taken on ES or on NQ. ES has just been buy side, buy side, buy side. Kind of like some high resistance. That was a high resistance liquidity run. This was high resistance. So that's good that we got to experience one of those today. Overall, I don't expect to see some form of reversal, like just straight out of the gate here. Could happen, but we now delivered to this buy side liquidity pool. We still have these equal highs there and that imbalance. You know what this exactly? It doesn't exactly remind me of, but if we go to NQ chart. The continuous contract. Wait, where do I have it? I don't know how it gets moved all the way down here. It reminds me of this. Just a little bit. This area in price. Stop on here. Who has been making money? Longs. We're gonna roll against those. This place definitely into IRL here. So my draw on liquidity is for sure here. I'm gonna roll against those people and draw into IRL. Maybe see ERL from that, or go IRL, and then from IRL, I don't think we're gonna go up to here. We're gonna go IRL, maybe back to ERL, generate some liquidity along that way, maybe get another ERL run, or we might get this, which I don't know, man. It's hard to when is the actual like? I need to look. When's the actual election date? If we even have one, November 5th. So what is that? That's around 4 months, around 3.5 months. So in terms of quarterly shift, I've had market structure shift on the daily here. So I would expect this to probably continue for a little bit. We have this imbalance right there. And then we're going to have some crazy manipulation. And all I can say is with what's happened so far, and I mean, I don't doubt that there's likely going to be manipulation. And like going through ICT's core content, like that's an election year, 2016, and during that election year, there was a big stop hunt on like Euro USD that had SMT. So there's likely going to be some wicking and then an SMT. I don't know. I guess we can go into old election years as well. I kind of want to do that real quick. I don't know why. Don't. I mean, honestly, you can't really tell here. Okay, look at we have delivered to a new day opening out here. We've taken buy side. Just consolidation condition again. All right, let's listen to a Twitter. I just looked my IP.
because these things are going to be in front of you, these problems that every trader has, or you learn how to deal with it on an individual basis. Like you are going to wrestle with things that the next person isn't, but it's all the same things. Uncertainty, performance anxiety, rushing, not being organized. And the top of the list, unrealistic expectations. My son went into it thinking, I'm ICT's son. It's going to be easy like a video game. I'm going to be able to tell my dad, this is what I did. Bada bing, bada boom, it's done. Yeah, bada bing, bada boom, you got your ass done. It's over. Now you got to fix it. But now you have it harder because you have to fix all of that negative thinking. You got to cope with that now, which makes everything exponentially harder. But not impossible, but much, much harder. And when I talk to you this way, and most of this stuff is designed for my kids, I'm telling them how to avoid all these things. And 2 of my boys now have tasted this shit. Cody thought he was going to whip crypto's ass, and it whipped his ass. I told him to stay away from it, didn't listen. Okay. He's not trying to trade. He's sour by it. Doesn't want to talk about it. Doesn't care. Okay, I get it. He wants to be the owner of his stepfather's business, and he thinks it's going to be passed on to him. I don't think that's going to happen. But he's an adult. Let him do what he wants to do. Cameron tried to do it the video game approach. All wrong. Caleb, slow and steady. Not trying to be big. Not trying to worry about getting out of his job real quick. Just real slow and steady. Real slow and steady. And he'll get there. I'm confident. He will have all the traits that I want all of my kids and all of you, my students, to have. He's not in a hurry to go in and tell his boss, I don't need to be here anymore. And because of that, he has the right mindset and it'll carry him. He has no girlfriend, no social life. It's work, study, markets.
What?
That might not be for you. Okay? I already said I'm not for everyone. The markets are not for everyone. But there is no sugar-coated, cookie-cutter approach that you're going to be able to walk out there, start making money, have no problems, no issues mentally, no baggage, no drawdown that causes you to think recklessly. There's nobody teaching this stuff.
That's crazy.
They're all trying to entice you to buy courses, buy memberships, buy products, follow me, copy me trading. You have to deal with the realities of you're going to do it wrong. What are you going to do when you do it wrong? How are you going to cope with it? How are you going to get past it? I've been there. I've been there lots of times. And I thought I had it figured out way faster than I really needed to invest more time. But I had to discover this stuff, going through it, patching myself up, stopping the bleeding, and working extra jobs when I didn't have a whole lot of free time as it was, just to get a little bit of money to start doing it all over again and making the same mistakes, thinking that I was going to get a different result. And many of you are doing that, even with my concepts. You're trying to force something that's not in the chart. You're trying to see a breaker. You're trying to see a fair value gap, a silver bullet, because you want it to be there. You're impatient. You're not waiting for it to form. You want it to be there. So you're going to look for it. And damn it, you're going to see it. They're like ink blots. They're Rorschach. They're projecting what you want to see. And you're fooling yourself instead of understanding how to reprice for real. And you can't do that quickly. I've never said that you can do it quickly. But once you understand how to reprice, and you understand how to determine where the draw liquidity is, 90 fucking days, you apply that silver bullet, you don't need a job. That is not 90 days you can quit your job. There's people out there taking my comments and making YouTube channel videos saying I'm going out there and telling everybody to quit their job in 90 days. No, you have to at least know what price is doing, apart from the silver bullet. The silver bullet is just a multiplier. It's a model. It lets you go in and act on what you should already understand about the marketplace. You're not doing it in 90 fucking days. Okay, you're not. You will not. Okay, so that we were understanding ourselves. But if you spend a year backtesting and tape reading and you get a really good feel for what markets are doing and how they work from one liquidity to the next, look at the video I put up, One Setup for Life. I literally tell you how to go in there and use the previous session's liquidity. And for the folks that are asking me, can you teach the London session? Just look at the previous day's afternoon PM session. I don't know why you're making it hard, but that's what you do. That's all you do. Apply that in between the 2 o'clock and 5 o'clock in the morning. London Open Deal Zone. Whether it's Forex or futures, it doesn't fucking matter. It's the same stuff. Like you are all complicating something I've made very simple. Because you're bringing something that you think is a mountain issue, and it's not. It's insignificant. But because of your impatience, because of the lack of discipline and self-control of yourself, you're making it something bigger. And it's the perfect excuse to say, I don't know how to do it, and it's not working for me, it's not profitable because ICT is not teaching me this and that. I've already taught it. But you don't want to put the work into it, just like my own son didn't want to. And he saw how that worked. And today he had a taste of it for real. And he's drained. Yeah, this is what it's like. It's like fucking boot camp. 6 weeks. You go in there, fluffy, full of fucking ding-dongs and bonbons, and they whip your ass in the shake in 6 weeks. You're salty as shit. You went out there and chew somebody's liver from their abdomen. Well, some people need to go through that to discover that they're their biggest adversary. They're their biggest problem. And most people will be quick to point the finger outside of themselves. Oh, that guy, that gal, that thing was not profitable because this and that. No, you just didn't do what was required. You have to step into that uncomfortable area of development, just like weight training, dieting, anything worth having and maintaining is going to require effort. And you are trying to learn the highest form of financial education on the planet. Think about what you're expecting. You think that you're just going to roller skate into this shit with $500, $100 account, and all of a sudden now you're fucking rich. This is not Instagram, okay? That's all bullshit over there. It's going to take you a lot more time, a lot more effort, and a whole lot more money than you're willing to put into it. And now there's other avenues where these funding companies are making it available to you. That resource, while it's available, it might be worth it. I'm not saying you should. It might be worth it for you to do it. But you won't beat it unless you're disciplined. You won't beat it unless you're organized. You won't beat it. You won't beat that combine if you do not have the right mindset and have control over yourself and say, okay, this is all I'm doing. This is all I'm doing. So you think 10 handle runs, 20 handle runs when I'm doing them, like, man, I wish I could do that. You know what you should be doing? You should be saying, I want to be good at getting consistently 3 handles. Not even 5. Start there. If 5's too much, start with 3. Once a day. And if you can do it, then start aiming for 1 in the morning, 1 in the afternoon. That's 6 handles a day. In 10 days, you could whip the shit out of the combine if you did that with 1 contract. You don't need to use their high-end, this is how many contracts you can trade. You don't need it. 1 contract. You can replace what you earn at majority of what your present income is. Now, I know there's some of your 6-figure people that have careers and such, and God bless you for it. But the majority of folks in America don't make 6 figures. The majority of them don't even make 50,000 a year. It's sad. But you can.
I want to see like from that entry. All right, looks like we're starting to get some displacement. $17. Wow. I mean, look at where price drew back into.
Make $50,000 easy as fuck. Even with that little $50,000 low rung on their account. That's why I told Cameron, I said, think about it like that. 50,000, that's all you got. You can't get the 100,000. You can't get the 150,000. You got to make it work with the 50,000. If you don't trade more than 1 contract and you can replace your job's income, is that a failure? No, that'd be awesome. Right. So why didn't you think about that when you were doing other shit? Well, because you want. That's the problem. You want. Wanting is the problem. You need to slow the fuck down. You have to slow down. All of that and more is available to the people that understand themselves, the markets, and the timing aspect. All of you know in the United States at least, what took place yesterday in our country. 4th of July, it's a holiday. So the protocol is expectations low. Now, we moved a lot in the morning, uncharacteristically. That's fine. But what did we have in the afternoon? FOMC minutes. Now, typically, that's not a big mover, but it causes a little flurry of action. So, was today an easy day? Not if you're brand new. No, it's not. So if you felt overwhelmed, it's normal. It's absolutely normal. And you shouldn't be beating yourself up. If you lost money trying to do something today, learn from it, but don't beat yourself up. But it's easy to try to tell yourself, Why bother? I'm gonna fail. I'm never gonna be able to do this. I lost money, blah blah blah. There was a guy I was talking to last week. I think it was last week or the weekend. He was saying, thanks for everything, ICT, but I lost so much money, I gotta stop. Right away, I knew that the guy was trading before he should have. And I didn't want to, in Twitter, beat him up, but you know who you are. You rushed into that because you are probably overwhelmed in debt. You're probably overwhelmed with the pressures of the world and your personal life, and you need to make a change. Everybody has room to make change. But in this industry, you can't speed it up. Just because you need it, just because you want it, isn't going to make it manifest itself, okay? I am not a believer of manifest it and it's going to appear. No. Last week. I think it was last week or the weekend. He was saying, thanks for everything, ICT, but I lost so much money, I gotta stop. Right away, I knew that the guy was trading before he should have. And I didn't want to, in Twitter, beat him up, but you know who you are. You rushed into that because you are probably overwhelmed in debt. You're probably overwhelmed with the pressures of the world and your personal life, and you need to make a change. Everybody has room to make change. But in this industry, you can't speed it up. Just because you need it, just because you want it, isn't going to make it manifest itself, okay? I am not a believer of manifest it and it's going to appear. No, because if that happened, it would happen for me because I was doing all that stuff in the beginning and it never worked. And working very, very hard doing the wrong shit isn't going to make it happen either. You have to know what you're doing and you have to know yourself intimately. That means all the ugly parts, the things that you never want to share with anybody else. That shit is the problem. And every one of us, every single one of us have those flaws, those triggering mechanisms that cause us to lash out in our personal relationships. We start fights and arguments. We don't realize it, but we're doing it. We're causing drama at work, online. If you go to bars or whatever, something happens in your brain before you got in that fist fight. You either got your ass kicked or beat the other guy. Now you're in jail. You drive down the road, somebody does something, you get out, you kick and stomp your car in. Now you're getting fucking sued. All of us have frailties, character flaws. And nobody talks about the things that's going to wreck your ass in trading because it's not pleasant. Nobody wants to be reminded that we're all human, that we all have to wipe our ass. Yeah, that's the reality, folks. There's no sugarcoating it here. And if you don't have these realistic perspectives going into this, it's easy to fall into Instagram fanciful believing it's fairy tales and it's all going to happen for me magically. All I got to do is buy this guy's bullshit, sign up to his Discord, go into his horseshit. Nope. It's going to take a lot of effort. But I promise you, if you do what's required,
No inefficiency at all on the 5 minute. It's looking like this could be the draw. First here. Buy side taken, shift to market structure. Here. There really is no shift here. It's here. I would say what could get what to focus on or what to get better at is just wait for a larger pool of liquidity to get engaged. None of this is like we haven't really taken any form of liquidity. Once we've taken this high here, then we have that market structure shift. I mean, yeah, this is hindsight 100%. But like once we get that buy side taken here, that big pool of liquidity engaged, then we see a 5 minute wick here. I mean, yeah, this can be traded, but it's just lower probability, and therefore might start seeing things that aren't actually there. Like no big pool of liquidity has been engaged session, or like this is just intraday stuff. Then once that liquidity pool gets engaged, it becomes a little bit more not obvious but clear. I mean, we've had this consolidation. And this is all within the silver bullet hour. Alright, 1050 macro just opened up. Okay, let's see how we expand here. For sell side objectives, discount arrays. We really just have this low kind of. Well, we're back within this order block, but I don't think this will provide support anymore. We've already used it once, twice to get a run to buy side. So our money offloads our positions there. Therefore, this order block probably won't be as sensitive. Probably won't be sensitive. And now I'm looking at this low here. So my interest is right here. $15-minute wick. Respect constant encroachment. Sell side. $15-minute wick. We respect constant encroachment with the bodies. We seek buy side.
It'll be a whole lot less time that you're fearful it will require. So you're thinking it's going to take 30 years. No. You're thinking it's going to take 6 years. ICP said it took him 6 years to figure this shit out. No, I had to figure myself out in those 6 years. I figured out everything I needed to know about the trading part in a little less than 3.5 years. But we'll call it 3.5, just call it 3.5. But it's just a tad underneath 3.5 years. I had everything in my head technically that needed to be applied for me to find everything I needed to find for setups, endless setups. But I wasn't satisfied. I wanted to supercharge it even more, and I was pursuing perfection, and I created a lot more performance anxiety issues in myself by trying to improve upon what you now know and what I'm sharing here. So it won't take you when you get there, you arrive at your consistently profitable, comfortable zone where you don't need to do anything else. You don't need to tinker with it. You don't need to change anything. You don't need to watch anybody else's videos, mine included. You got to watch anybody else's courses, books, none of that shit. You know exactly what you're doing tomorrow, the next day, 5 years from now, it's going to be the same show, boring. You go in, you make your money, you stop, you go live your life. That's what real traders do. That's what real traders do. They are not in here all day long chained to these fucking computers. They're not doing that. They're not doing that, folks. The people that make money, they go in, they get their shit, they get done, and they go live their life. How many of you are looking at trading like that? Chances are you're not. You want to trade the London session, then you want to trade the New York session, then you want to trade the PM session, and then I hope everyone's going to get moving the Asian session because fuck it, I got time. No. Which time of day works for you? London, morning AM in New York, or PM session? Forget Asia. You can't trade in Asia. There's not enough moves. Can it? Does it sometimes? Yes. But not, in my opinion, not define consistency and find yourself out of your job. No. No. The volatility is too low right now. When the markets were really wild, and we had these really 300 pip handle, not handle, but 300 pip ranges every day. This was years ago. Asia used to be really nice, but it's consolidated. It's a whole lot more quiet in that period of time. Even in the yen pairs, Aussie pairs, New Zealand dollar, they're usually the markets that are prone to be more active then, and they're just simply not enticing enough to do it. So what happens? What do you got to do? ICT, if the only thing I can trade right now is in Asia, then you need to make changes in your life. If you want this bad enough, you'll make the changes. And the efforts that you do in your backtesting will give you the courage to make those changes. Don't just do it blindly. Show yourself with evidence that the things that I'm teaching you are in the charts, not because you did it for a week or a month. Really, really go in there and be highly critical. Do the things I tell you, show up in price action. When I tell you they're going to show up, how I teach you that they're going to appear in price. You're not manifesting shit. The market's been designed, it's designed, it's coded to deliver like this. If these things are in price action beforehand, in that time of day, you expect this thing to unfold, and then you wait for it to happen. And you do that week after week until you have months of experience doing it. Nobody's going to be able to convince you that what you have observed isn't the facts in reality. And you will do whatever you need to do to make the changes in your life. That means change your career, change your location, move, step down from how you live right now. If you're single, you don't have kids, it's real easy to do that. But if you have a family, it's challenging. I'm not saying it isn't. But are you willing, if you discover that you can do this, but you have to make some changes that require you to go down in your living? You might live in a nice single family house. What happens if you go down to an apartment because of the requirements for money or moving to a different time zone? All of you are going to have different things, these different kinds of barriers, but they're not mountains that can't be passed. They're just speed bumps. I'm not trying to minimize it because I know some of you are going to have, but you, ICT, you don't know. It's easy for you to say. Look, I'm not saying it's easy. I'm saying that I don't have a way of fixing everything for all of you. Remember, no sugarcoating. And you can't fault me because you live in a time zone and work a career and you have a family and you have a spouse that is not supportive. That's not my fucking problem. I didn't create that problem for you. Some of you send me emails bitching to me like I caused that for you. I didn't do that. I didn't know you. But that's the level of mentality some people will apply to me as a mentor and think that, I'm somehow supposed to pull something on my ass to fix that. I don't have a solution for those things. You're going to have to make those changes. So there's a lot of difficulty when you step into this industry, and it's intimidating. And if you start off on the wrong foot, even worse when you're told not to do those things and you do it, and now you have fear behind every execution. You have concern about whether you're never going to be profitable or not. It's easy to talk yourself out of it. It's real easy to talk yourself out of this. And I'm just reminding you, don't. I'm not making any money talking to you right now. There's no ads here. I want you to be successful. I want you to know what you're walking into is going to be very difficult because you're going to make it almost impossible. You are. You are the thing that's going to make it or break it. That's it. That's the way it works. You're not going to shorten the learning curve by anything. Nothing. I don't care what they put in their titles of their fucking videos. Nothing is going to shorten that learning curve. It is not going to happen. Whatever that you, on an individual basis, require is what's going to require. And you don't know how long it's going to take. But you have to show up with the expectation that I'm here for the duration. This lifestyle, this income opportunity is worth it. I don't give a shit how many months I got to do backtesting. I don't give a shit how long I got to take reading in the future. My outcome, my end result is I'm going to make whatever the fuck I want to make. And nobody's telling me how much it can be. Nobody's going to fill me on. Nobody's telling me I can't go on a vacation, go here, go here. Nobody's telling me I can't afford this. Nobody's doing that. Nobody is doing that. Your thing is going to shorten that learning curve. It is not going to happen. Whatever that you, on an individual basis, require is what's going to require. And you don't know how long it's going to take. But you have to show up with the expectation that I'm here for the duration. This lifestyle, this income opportunity is worth it. I don't give a shit how many months I got to do backtesting. I don't give a shit.
Wait, 1050 macros right now. Yeah, we put in equal lows. ES still has these equal lows. I don't think price is gonna reverse here. ES is back within the new week opening gap. ES has a 1 minute imbalance that we might draw into a little bit. Kind of have barely tapped it. Now broken above that new day opening gap. Notice how many times we're referring to this? 1, 2, 3, 4, 5, 6 times already. I think I just need to only look for a 2022 model. That's it. Not even look at all these other PD arrays. To be straight up, especially on like days like this, kind of choppy or very choppy market environments. It's not like it's going straight to an objective. Days like these could be pretty demoralizing, and I'm not gonna let that happen. So, I'm gonna just close these charts for now. I'm just gonna close them.
How long I gotta take reading in the future? My outcome, my end. Result is I'm going to make whatever the fuck I want to make, and nobody's telling me how much it can be. Nobody's going to put a limit on it. Nobody's going to tell me I can't go on a vacation, go here, go here. Nobody's going to tell me I can't afford this. Nobody's doing that. Nobody is doing that. And I don't need to put a fucking resume together anymore because I'm not trying to get hired by anybody. Nobody can employ me. There's not a fucking job out there that can pay with it and earn in these marketplaces. That's what your mentality needs to be. Maybe not so much with the cuss words, but that's how it has to be, folks. That's how it has to be. You have to resolve in yourself, say, you know what? This is going to be hard, but Everything that you do that leads you to that, once you get here, once you know exactly what you're doing, and it never changes. Once you learn how to ride this bicycle, it's your skill set for life. And where you want to pedal that fucking bike, and how far and how high is up to you. Nothing limits that. Nothing limits that. Look around. Look around. These folks out there did not even use their own money, and they went into these other companies, did their processes, passed their combine, beat the shit out of the stuff they laid in front of them as a challenge, and they're taking down six-figure plus $500,000 now. And the companies themselves are interviewing them. Where's the fucking reason to doubt it? What's the excuse that you can't do it now? What is the excuse that says you can't do this? The ones that you're making up in your mind. The ones that you're saying, I just wish it was easier. I wish I could just do it faster. The folks that are doing it, I promise you, their fears, their biggest fear of how long it might take is a joke to them now, because they are there now. They can do it. They know exactly what they're doing. They know tomorrow, next year, they're going to be able to do the same shit. And they think about the things that they worried about while they were going up. When they were working their ass off going through this stuff, they were thinking about all the things that you're putting in your brain right now as a reason to just quit. Why bother? I promise you, if you are listening, and you've made money using the shit I taught, and you felt this overwhelming fear, or I want to quit, or it's going to take me forever, once you got there, isn't it silly how you thought and clung to those fearful things and held them close to you like they're best friends, you don't want to let go of them? Those fearful thoughts are perfect excuses for you to stop. They're excuses as to why you didn't succeed. Instead of saying, yeah, it's normal for me to feel this way. And when you get there and you make your money and you're consistently profitable, you're going to look back at that and see how silly that was. You're going to laugh literally out loud thinking, why the fuck did I think like that? But it's normal. But once you're there and you look back, it's like, that was dumb. Like, that was wasted fear and energy worrying about something that wasn't even that big of a factor. I just showed up every day, did what I was supposed to do, and I'm here now. I can't pull it back from them and say, oh, I don't like you. Let me take that information from you. Your abilities are now being revoked. Like a license agreement. No, you learned that skill. You fucking earned it. You worked for it. It's yours now. Run with it. I'm just asking to share with me in private what you're doing. I would love to keep up with all of you. And the folks that do well, they do that. Some of them have stepped out there in the public's eye, and they see it. You see it. They want to be bigger giants and titans in the industry. God bless them. I'm not trying to point them down. I'm pointing to them. Look what they did. Look what they did. I didn't tell them those trades. They got it on their own. They pushed their accounts up there on their own. That's fucking awesome. And every single one of you have the ability to do this and more. But you're sitting around worrying about, oh, what if the market stops working? Who the fuck knows if it's going to stop tomorrow? Who cares? Why are you worried about? Oh, all these people are learning new shit. That's going to change. I'm not changing shit. It's not changing. Why are you wasting time making excuses for your shit? Get out there and start working towards it. You might just roll over and fucking die if that's how you're thinking about it. But you know, what's the point? I mean, I'm not going to just work this shit job and this mundane existence, because they might change everything. What if is the worst thing you could ever do? If it's holding you back, if a what if thought is holding you back, you need to flip that shit upside down and say, what if it doesn't stop? What if I get out there and I do it and I fucking make way more money than I fucking never thought of? What happens if I do it in half the fucking time that I've been fearful it's going to require? Do that. Because that's the shit I had to do. I had all those fearful thoughts. I had all that shit. And I said, you know what? There's nobody here encouraging me, so I'm going to look at this like I'm a fucking underdog. The world says I can't do it. My friends and family says I can't do it. My wife left me. I'm fucking broke. I'm going to change shit now. I'm going to fucking do this. They said I can't do it. I'm going to find 81 fucking ways to do it. 81! I dare a motherfucker out there to say they got more fucking entry techniques than me. There ain't a fucking person one that can do that. I will tap dance every fucking day on these fucking markets and do whatever the fuck I want. Moonwalk out the fucking door. Profitable. There ain't a fucking thing I can't do in these markets. And when you know how to do this shit, you'll feel just like that. And if they want to say you're arrogant, fuck them! Fuck them! They're broke! They're fucking working! They don't give a fuck about anything that's successful because they can't fucking do it. They want to drag you down. I'm telling you, I'm grabbing you by your fucking hair and I'm getting your fucking ass up here with me. Come up here! Come up here! You're laying around these low vibration fucking morons. You're listening to people that are fucking broke. They're broke. And you're taking this bullshit and you're listening to it and you're taking it and you're subscribing to it. And you're holding yourself back. For what? For what? You're afraid someone's gonna say something bad about your mind? Fuck these fucking broke motherfuckers. The people that are talking the loudest, they're fucking broke. They can't come here and cancel shit. Look at this fucking army we are. Look how many motherfuckers are coming up. This crop ain't done growing. We're climbing, okay? Everything that you're seeing around here, this community, even when I'm fucking slowing the fuck down, it's still gonna grow. Everybody's gonna be doing this shit in the future, and they're gonna say, you know what? This shit is the real fucking thing. This is the real shit. I wish I never would have done this. I wish I would have started sooner. Every person that's made fucking $500,000, $20,000, whatever fucking it is, they've always said the same thing. I wish I wouldn't listen to the bullshit that people say about ICT and his fucking concepts. I wish I would have started fucking sooner. I wish I would have blocked out all the bullshit because this is it. This is exactly what I was looking for, and I wish I would have started sooner. Everybody fucking says that. Everybody says that. Nobody that put their effort into this and fucking started making money said, I regret doing this. Fuck this. I don't like all this fucking money. I don't like this fucking success. I don't like this fucking continuity. I hate being this fucking calm going in the marketplace. I can't stand not fucking being able to be a consistent loser. I want to fucking just stay in bed because it's just the same thing every day. I go out and I know what I'm looking for and it happens. Does that happen here? No. Everybody's calm, cool. I'm the only one that gets fucking nuts. Yes, this is the first time. It's unfiltered here. I'm not supposed to be listening to with your kids next to you. But there's a whole lot of bullshit. And this crop ain't done growing. We're climbing, okay? Everything that you're seeing around. Said I can't do it. I'm gonna find 81 fucking ways to do it. 81! I dare a motherfucker out there to say they got more fucking entry techniques than me. There ain't a fucking person one that can do that. I will tap dance every fucking day on these fucking markets and do whatever the fuck I want. Moonwalk out the fucking door. Profitable. There ain't a fucking thing I can't do in these markets. And when you know how to do this shit, you'll feel just like that. And if they want to say you're arrogant, fuck them! Fuck them! They're broke. They're fucking working. They don't give a fuck about anything that's successful because they can't fucking do it. They want to drag you down. I'm telling you, I'm grabbing you by your fucking hair and I'm getting your fucking ass up here with me. Come up here. Come up here. You're laying around these low vibration fucking morons. You're listening to people that are fucking broke. They're broke. And you're taking this bullshit and you're listening to it and you're taking it and you're subscribing to it. And you're holding yourself back. For what? For what? You're afraid someone's gonna say something bad about your mind? Fuck these fucking broke motherfuckers. The people that are talking the loudest, they're fucking broke. They can't come here and cancel shit. Look at this fucking army we are. Look how many motherfuckers are coming up. This crop ain't done growing. We're climbing, okay? Everything that you're seeing around here, this community, even when I'm fucking slowing the fuck down, it's still gonna grow. Everybody's gonna be doing this shit in the future, and they're gonna say, you know what? This shit is the real fucking thing. This is the real shit. I wish I never would have done this. I wish I would have started sooner. Every person that's made fucking $500,000, $100,000, whatever the fuck it is, they've always said the same thing. I wish I wouldn't have listened to the bullshit that people say about ICT and his fucking concepts. I wish I would have started fucking sooner. I wish I would have blocked out all the bullshit, because this is it. This is exactly what I was looking for, and I wish I would have started sooner. Everybody fucking says that. Everybody says that. Nobody that put their effort into this and fucking started making money says, I regret doing this. Fuck this. I don't like all this fucking money. I don't like this fucking success. I don't like this fucking continuity. I hate being this fucking calm going in the marketplace. I can't stand not fucking being able to be a consistent loser. I want to fucking just stay in bed because it's just the same thing every day. I go out and I know what I'm looking for and it happens. Does that happen here? No. Everybody's calm, cool. I'm the only one that gets fucking nuts. Yes, this is the first time. It's unfiltered here. I'm not supposed to be listening to with your kids next to you. But there's a whole lot of bullshit in this industry from people that don't make no motherfucking money. They can't produce a fucking millionaire student. Ain't got no profitable fucking students. They got a lot of chit chat, a lot of shit talking. Ain't done shit. Ain't no receipts, ain't done shit. And you're letting them, these low vibration fucking cretins, these little fucking waste of fucking breath mutants, they're fucking bringing you down. They're bringing you down. You want to be with them. You want to hang with them. I don't roll like that. I don't roll with fucking people that says I can't do something, because I'm going to believe them. I'm going to agree with them, and I'm moving. I'm not staying there. I'm not pitching a tent around people that says it can't be done. Tell me I can't do it. I'm going to find multiple ways to come back in your fucking face and say, here's this way I did it. This is the way I did it over here. This is the way I did it here. This. You got to motivate yourself. You got to stay motivated. It's not going to be easy. It's going to take a lot of effort, a lot of real effort. Not just watching my fucking videos. I say all the time, watching them is not learning. It might inspire you. It may give you reasons to stay at it. But that is not to replace you going into your own charts, studying them, going into old moves. At the times I tell you when these specific models present themselves, go back in old moves. Forex, futures, commodities, I don't give a fuck what it is. You go out there and you prove to yourself. There has never, ever been a motherfucker ever came back and said, I went through all this stuff and I tried to look for it to fail, and it's always there. It's never fucking happened. No one's ever came out and said ICT shit doesn't work with facts. It's never happened. Now you got some Tom, Dick, and Harry that wants to fucking try to get ad revenue on a fucking YouTube channel and got shit going on in his life, misery. He'll say all kinds of shit. And people like him will say all that kind of shit, but there's no actual fucking evidence. What do you do when you have all these people around the world, different walks of life, and they're coming forward and they're making real money? And not one company, every fucking company has ICT profitable students. Hello, where the fuck is their students making money? Where are they making money? It ain't there. But you're listening to this bullshit. You're listening. You're entertaining that. You have to block out everything. Everything. Keep the focus on you. If you do that, I fucking guarantee you will find your model. And when you do, don't tinker with it. Don't add more to it. No matter what I teach in the future, don't do anything else. Accept the facts that sometimes you're going to do it wrong. Accept the facts that it might not deliver on the day that you try to trust it. It doesn't mean it's broken. It doesn't mean that you can't be profitable. It doesn't mean you're a terrible trader. It just means that you messed it up. You did. Own it. Come back the next day. The next opportunity. If you do that, you will be light years ahead of everyone else, because everybody else will want to change. I tried this PD array. I tried this fair value gap. It didn't work. Let me try this breaker now. I tried to break it. Didn't work. Let me go ahead and do institutional reference. It didn't work. Let me go back to OTE. It didn't work for me when I tried it the 3 times. I tried to call it experience and backtesting. The fourth time I failed. Let me see. Oh, he's got something else going to teach. Let me look at that one too. That's not somebody that's really making a conscious effort. You need to be very diligent about doing these things and be very passionate about why you're doing it. If you're not in this to make a shitload of fucking money, then you're here for the wrong reasons. That's it. That should be the motivating factor. Lots of fucking money, because that's what's available if you can control yourself and you know what you're doing. If you can't do those things, manage yourself, your emotions, start with a low-hanging fruit approach and build up slowly, blocking out all the bullshit. And that means people that want to suck your own ass off. Like, you get on social media and people like, oh, they love you, they pander to you, oh, you're this and that. You don't realize how much of an impediment that is. Because once you start listening to that, and this is exactly what happened to me on America Online. That's why I don't like it, and I can't fucking say it. When you say I'm the GOAT, the greatest of all time, I see that as you're a piece of shit, ICT. Because I think everybody that calls themselves a GOAT is a fucking piece of shit poser motherfucker that can't do shit. There is no GOATs, okay? There's no GOATs. There's no greatest of all time in trading. I'm not a fucking king, and ain't no fucking other king out there. Stop pandering to people like that. Stop worshiping them. Don't worship me. I don't need that kind of fucking attention. Just say thanks. That's enough. That's all it is. But when you allow that stuff in, or you start being a part of it, and you're glad handing with other people online, whether it be me or anyone else, you're literally doing all the wrong things. You're making it emotional. There's no reason for that stuff. I'm here. I'm a conduit. Whether you tell me you love me or you don't love me, I'm still gonna be doing this shit. So it's not required. Okay? I'm gonna be doing it. I'm still gonna post videos. I'm still gonna post the shit. We got until November. None of this is gonna slow down because I don't have enough people calling me the GOAT. I don't want to be called the GOAT. But it's important that none of you fall into that trap, whether you're doing it with me or someone else, or that you seek it yourself. Because as soon as you do that, you've now invited emotion. Dopamine hits. It's not about that. All of that's going to be impactful to your decision making and trading. Because whatever you did, I'll paint this picture for you and then we'll close this. Whatever you did that causes that social media response, you know, you're the GOAT, or that was amazing, or you're beast mode, or whatever, you're going to want to do something again when something creeps into your life. Something bad, something uncomfortable. You don't feel good. You woke up with a bad stiff neck and you're just miserable because you can't be comfortable. I need to feel good about something. Let me get somebody to call me the GOAT online. Give me some reason to say I'm an awesome fucking trader. So you're going to go out there and you're going to try to create something in your account. Why? Because the trade's there? No, because you want to do something outside and external to why your model would be telling you to take a trade. It sounds simplistic. It sounds like, well, this is nonsense. No, this is exactly what people do, and they blow their fucking asses out. Their accounts are gone, they're wrecked, and they've ruined themselves. It all stems from something simple like this, because you've invited emotion into it. And that's exactly what my son did. He wanted to come out and prove the world that ICT Junior is now born, and here it is. He wants to go out and run around on social media, Instagram, Twitter, YouTube, and be a menace. He still might be, but he's got to learn how to be a menace in the charts first. He's got to be formidable in the charts. You can have all the, the want to do it right now, but without the skill set that can be acquired with time and effort, a whole lot more effort now. It won't happen otherwise. Just because I'm daddy, ICT, just because he's my son, does not give him that built-in advantage. There's no built-in advantage. There's no advantage at all. And with me sitting him next to me, with all the things that's going on in his mind, I have to now arm wrestle him and make him conform into things that he doesn't see as the right way now. Just like some of you probably already turned this Twitter space off. You think it doesn't apply to you. I guarantee you haven't made money if you did. The folks that turn this off are the ones that think that they can go out there and watch a 5-minute trainer video, watch some kind of horse shit, go in and watch my video, and they should be able to walk out and be profitable and pass up on the account challenge the first time and start making $20,000 a month in payouts. That's the people that turn off these parts of the video, or they don't listen to these discussions because they have their own head up their own ass. They can't see where they're at. They don't know the lay of the land. They've never been there before, and they believe the bullshit that's online. So yes, it's difficult. Yes, it's intimidating in the beginning, but you have to have this approach that you're not going to stop. Nothing is going to deter you. Nothing's going to talk you out of it, you or someone else, and you have to guard your mind. Every single one of my profitable students will tell you the same thing. They have to at least cancel the influence of other people that says they can't do it, whether it's their friends or family, coworkers, or people online that know them, or they completely cut it all off. That's not a cult. That's someone that's secluding themselves for intimate study. If you ever went to college and you were studying for your final exams, did you go and just study in a public space where there's a lot of noise and people can talk to you and do that at work? No. It'd be unprofitable. It meant something to you. You had to put a lot of effort into that. Well, this is much worse than that because it's you. You are in the way. What you think you should be able to do, what you're afraid of, what's going to happen to you, what happens if this happens, You're worried about things that aren't there yet. And if you do the things I'm telling you to do and you develop a good work ethic and journaling, when you encounter the things you're afraid of, and by hearing what I'm telling you to do and how to cope with all those things, every single one of my profitable students will tell you the same thing. They have to at least cancel the influence of other people that says they can't do it, whether it's their friends or family, coworkers, or people online that know them, or they completely cut it all off. That's not a cult. That's someone that's secluding themselves for intimate study. If you ever went to college and you were studying for your final exams, did you go and just study in a public space where there's a lot of noise and people can talk to you and do that at work? No. It'd be unprofitable. It meant something to you. You had to put a lot of effort into that. Well, this is much worse than that because it's you. You are in the way. What you think you should be able to do, what you're afraid of, what's going to happen to you, what happens if this happens, You're worried about things that aren't there yet. And if you do the things I'm telling you to do and you develop a good work ethic and journaling, when you encounter the things you're afraid of, and by hearing what I'm telling you to do and how to cope with all those things, they won't be so terrifying and scary. And the first thing you'll do is stop. It's not an invitation to go press a button. If you're uncertain, if you're scared, there's no shame in there. Stop. Now, there's going to be people out there on Twitter that'll say partials are fucking stupid and you're like a pussy and they don't ever show you them executing and everything. The reason why everything I just said in this lecture tonight is counterproductive and counterintuitive. But I'm going to tell you that you have to reward yourself. Along the way, you have to do it. That means when you feel staying in a mood and you're brand new, get out. It's so much better to do that and then see if it panned out in your favor and say, okay, I wasn't comfortable there. I got out. It allowed me to have a clear perspective of what the market was doing because now I'm not influenced by the profit and loss of it. And then I'm now encouraged because if I just sort of stay with it, I'll remember this trade next time and I'll try to stay with it a little bit longer. And you gradually grow into that. Nobody walks out there and does a full pull from entry, stop loss, and full target, no partials, and it just goes right to the thing and they just did it the first time and that's how the trades are the rest of their career. It doesn't work like that, folks. It does not work like that. And if it did, they'd be on there showing you executions and showing they can do it, and they're not doing it. So, anyway, I got that off my chest today because it was a little much for me to sit there all day and go through a whole lot of stuff that could have been easily avoided if you would listen to me. But we're on the right path, and you are too. You just gotta stay with it. Hope you got something out of this tonight that was helpful. Hopefully I gave you some encouragement or anything. I made you laugh and you had some entertainment value out of it, and that's a win too. Okay, so I'm gonna close this one. Wish you all a very pleasant evening, pleasant day, and I'll talk to you next time. Be safe.
I was good at Twitter space. Yeah, look at the charts. Look at the charts. Pretty tricky AM. Pretty tricky. It's looking like some manual intervention. Oh, like we take a buy side, come back, sell side. Do we at least have SMT here? Yeah, we do. SMT at these lows. This low gets taken and we immediately pump to buy side. Back within that 1 hour order block too. Back within that 1 hour order block. I kind of want to take. I kind of want to take a break away from the charts. I don't want to end stream, but I think I might end stream. Then I don't think I need to go live later. I'll probably just like chill off stream, you know. Cause I do want these streams to be like 12 hours, but I honestly don't think that's like the best, you know. Like, I don't think that's sustainable. And I could tell myself, yeah, I'm gonna do this for 12 hours, but I think sitting at the desk is that's hard. That's hard to do for 12 hours, and especially to do that consistently. And like I don't always want to be a slave to the charts. Like I don't want to get up and have to be a slave to the charts every single day. So why would I try to cultivate that habit right now? Hmm. Yeah, today was 100% tricky delivery. It was not the greatest. We have this 1 hour order block we're holding. We come up, we purge buy side, barely purge buy side, then we come back. Then we form SMT. We take this low, and then we just immediately pump to buy side. Like, I don't think that's missed opportunity at all. We inverse this. No, and then we just straight reprice. Like this, in my opinion, I think this is like manual intervention. So crosshairs for draws, definitely this imbalance, or definitely these highs here, and honestly, probably all-time highs in the future. This all is just like pretty much one imbalance. You have that big Sibi right here. This big one here. So we'll see. Yeah, low-key. I want to end it, but I don't as well. Yeah, if I think I should end it, I might end it because there's always gonna be tomorrow. There's always gonna be tomorrow. I'll do some more studying later, off stream, and yeah, I'll catch y'all in the next one. I appreciate y'all.